Alrighty. Ooh, look at that. We're just getting ready to rumble. Hawkins is here. David, how's it going there, Mr. David? Mr. Russ, how's it going? Just getting started. Give me a few minutes to get all set up. What happened here? Well, that didn't work out right. Discard. Ooh. Dividend stock talk. There we go. That ought to work. Getting ready to rumble. Kosha, Bill Vegas. What's happening there, Mr. Vegas? Almost ready. Just change this here for a second so you can see what's going on. There we go. Bill Vegas, Kosha. Mikey P all day. What's happening in Mikey P? All right, let's get ready to rumble. Here we are. All right. Jack Lees. What's happening there, Jack Lees? Brandon's here. Brandon's here on Instagram. Way to go. All right. Ooh, I can't pronounce that name. I can't even read that language. Rob's here. Rob Claus. I'm sure you have a brother-in-law or uncle or grandfather named Santa. Anyway, Austin, what's happening? All right, let's get started. It is Sunday, August 11th. We are officially coming into week number 32 for the year, or otherwise known as 26, 32, 6, week 6, week 6 for the third quarter, because we're actually into the third quarter. Isaac, hey, hope you're well. Thoughts on XOM this week? Well, let's take a look at XOM. First one on the list, why not? ExxonMobil, XOM. ExxonMobil looks interesting. First thing I always want to check out when I'm taking any stock is, ooh, let's do this. First thing I always want to check out any stock, high, low, where was it, where is it, in which direction is it currently going. We're looking at ExxonMobil at the moment. Okay, ExxonMobil, XOM. So, second thing I want to take a look at is what is the current price. Currently 119.27. The closest one's going to be the 119.88 cents. Yeah, that's not going to be worth it. 120. Yep, that's not going to be worth it either. Sorry, but the chart itself, that's not looking very happy either. We go all the way to the 10th. Yeah, the 10th. Look at it. Up, down, up, down, up. Yep, it's got maybe another day or so to go to the upside before she starts pulling back down. So I'm going to say, personally, for me, you guys do what you want, but for me, I like ExxonMobil, but not this week. It's a little too high for me. Some comments on this live are going to be filtered, protected the innocent, blah, blah, blah. Pfizer. Well, let's take a look at good Pfizer. You always ask. Thanks, Scott. Yeah, I was going to ask anyway, but as long as you did. All right, we're going to take a look at Pfizer. Pfizer. PFE. Okay. Draft. I'll get my videos going. Because people are always asking for videos on this stuff. Second stock of the evening. We're going to take a quick gander at Pfizer, PFE. High, low, where was it, where is it, what direction is it going? Now, it doesn't look that great right here. This is the last couple of weeks, but let's take a close look at it. Brother, I appreciate that. Thank you. More likes, tracks. Okay, what is one thing going? What is one you're going to do in the morning? Thawkins, I don't know that one quite yet. Okay, but we're working on it. We're looking at Pfizer at the moment. Second thing I want to take a look at, what am I going to buy it for? $28.60 is the current price. The $28.50 is going for 44 cents. Well, that looks good. That's well over 1%. The 29's not quite. But we're looking at the 28. No, because once you take the 60 cents off of there, you're only making 15. No, you take 10 cents off there. Well, that's the only one right there, the 28.50. So if I bought it first thing in the morning, so the 28.50 call strike for that call option, yep, there's my 1%. VLO. All right, before I do anything else, I want to write Pfizer down. Well, before I write it down, let's take a look at the chart, because although the numbers looked good, the numbers may look good on Pfizer. What is the chart telling me? Okay, just because the 28.50 is going for over 1%, yeah, that looks good. But is it the right time? Well, for that, we need to better look at the chart. We saw what it was a year ago. We saw where it is today. We saw where the high is. We saw where the low is. So where does it look like it's going for the next 4 or 5 days? Well, if I'm jumping on a Monday and I want to jump out on Friday, I want to make sure that everything is pointing it in the right direction. Okay, so a year ago was the high of the year, 37.19. It bottomed out in the end of April at 25.20. Well, let's take a look at the last few weeks, specifically the last 30 days. 30 days ago was the 30-day bottom, 27.50. From there, shoots up, little pullback, keeps going. 31.52 is the 30-day high. Now, from the 30-day high, she pulls back. 28.55 is where we are today. Not quite a signal to jump in, but it is a signal for us to take a look at it during the week. Because for me, personally, I like 2 days to the upside. And if Friday was the 30-day bottom, and it's going to give me 1%, well, I want 2 days to the upside before I jump in. Unless, of course, you really like Pfizer and you don't care that it's in the middle of a downtrend, because you have no idea how long the downtrend is going to be until a bottom is isolated and it introduces itself. It knocks on the door and say, hello, this is the bottom, start buying, because you make your money in the stock market when you buy low and you sell high. Now, stocks do nothing but go up and go down, up and down. No way we can't keep this welfare state. Okay, no way. Thank you for that little tidbit of input. Useless in this type of conversation that we're having, but okay. I let everybody speak their mind. Oh, that is horrible. Tastes like poison. Ugh. What is it? Tea, lemon, honey, bourbon. Ugh. Someone, hello, how is it going? Someone is going absolutely lovely, thank you. So, back to here. Okay, it's economics. How do we pay all this money and it doesn't crash? All right, no politics, please. All right, so, you won't have that kind of conversation. Let's have it somewhere else, not here. Okay? Thank you. All right. I'm writing down Pfizer. Okay, I'm going to keep my eye on Pfizer and want to find the bottom, PFE. So, hypothetically speaking, the bottom should show up sometime this coming week. Now, I like 2 days to the upside. Do we know for a fact that it's going to turn around and go back up? No, we don't. It could actually keep on dropping. It's going to keep on dropping until you and me decide, hey, that's low enough for Pfizer. It ain't going any lower. And you and I are the ones who make up this craziness here. Okay, we decide what's too high. We decide what's too low. There's always someone out there willing to buy, and there's always someone out there willing to sell. Okay? Now, Next on the list, VLO. Joey, how would you recommend researching stocks before buying them? Okay, Joey, that's an interesting question. I'm going to give you my brief idea of what I think. No way I want to know 10 years in the future how this blank is going to go. Ooh. I couldn't answer that one for you. Seriously. I mean, we'll be here for another 10 years, but what's going to happen? Don't know. We have no idea what's going to happen in the next 2 or 3 months. Let alone the next 10 years. So like I said, please, no more politics. Thank you. Joey, how do you find and research a good company? Well, last week, you know what? Let's do it right now. We're going to take a quick gander, and we are going to check on FinViz. I come here every once a week just to find out how many stocks there are in the current stock market. This website right here, Financial Visualization, it's a great website, it is, but how do you use the information, you know? Don't get me wrong, it's cool. Okay, this is the first thing I want to see, and this is called the stock screener. So if you want to know anything interesting about what's happening in the stock market, well, here you go. Exchange, market cap, earnings date, price, index, dividend yield, average volume, target price, all this kind of information. Well, that's one page. That's descriptive. Then you can go to fundamentals. Well, fundamentals is a little bit different. Forward PE ratio, price free cash flow, PE, price over earnings, price over cash, earnings per share growth for the next 5 years. There's a lot of information you can find out here, but that's not what I'm looking for. What am I looking for specifically? Well, this is what I'm looking for specifically from this website. First, I want to get rid of the ads because they're a little distracting. All right, first thing I want to look at is this number over here in the bottom left corner. 9,597 companies to choose from. That's almost 9,600 companies. So how do you decide which one's right? Well, here you go. My humble opinion, you have two stocks, or two categories. Let's do it, two categories. Category one are companies that take all their profits and put it back into the company for accumulated cash growth or accumulated value. So the stock value goes up. Okay, great. The second group of companies are those that take all the profits and give it back to the investors. That's you and me. They take their profits and they share it with the people who invest with them. Okay, that's for cash flow, not capital growth. So there's two different types: capital growth, cash flow. Let's get rid of all the capital growth. That's not what I'm looking for. I'm looking for cash flow. Safe, predictable, consistent, 1% per week cash flow. There's 9,597 companies. There's the number right there. Well, with one click of the mouse, dividend yield. If a company is paying out a dividend, then they're sharing their profits. So I can click any yield whatsoever. Do I want a positive yield? Anything positive? Well, 5,460. Now, if I wanted to go to a 2% yield, well, 3,368. The number's right there. If I want to do a 4% yield, well, now 1,865. That's all the different companies, and here they are right here. Okay? It shows you all of the companies. Let's get rid of this. Look at all that page, 94 pages, all these companies. Look at them: Arbor Realty, Yield Max, Ambev, Alliance Bernstein, American Assets, Curve Yield Premium. Well, there's a whole bunch. There is. 1,865. Okay, fine. Now I'll go here and click on optionable. right over here. See, option. Okay, so I only want to do companies that have options, specifically weekly option, because I want a weekly cash flow. And I can't get a weekly cash flow if there's no opportunities for me to get a weekly cash flow. So I like dividend stocks, specifically those that consistently increase their dividends. And I like companies that have options. It allows me to get a weekly cash flow. So if I click optionable, well, that breaks it down to 995 companies have a 4% yield or higher and have options. Well, great. That actually works in my favor. So let's go back to here. So more specifically, I like companies that have 20 years, 2 decades of increased dividends, because a dividend is the fastest way to find out how profitable a company is. Well, it's got a haircut, so I get hair all over the place. If a company is profitable, okay, specifically ones that pay dividends, they're sharing their profits, that's what we're looking for. Now, if they continuously increase their profits every single year, well, that means they're profitable every single year. Higher and higher profits means consistently profitable. And then weekly options. There's only about 300 of those companies. Well, let's progress. So, Joey, that's as simply as I can put it. Okay, I like companies that have 20 years of increased dividends and weekly options. Okay, what are we looking at? We're looking at the dividend kings, the dividend aristocrats, the dividend champions, the dividend contenders, and of course we can throw Warren Buffett's list in there just because we like Warren. That's how I do the searches on my companies. All right, at some point I'll take a look at the book value, I'll take a look at the cash flow. I don't really need to know that kind of stuff. As long as they're consistently increasing their dividends, well, that means they're consistently profitable. If they've been doing it for more than 20 years, well, that means they've been profitable for more than 20 years. Those are the only companies I want to invest in. How you figure out what you want to look at, Joey, that's totally up to you. All right, VLO. I'm going to write VLO down. VLO. That's Valero Energy. I like them. Pat, he will not like it because it is a monthly. Verizon. Todd wants to look at Verizon. We looked at Verizon last night. Last night, we looked at Verizon. It was a no last night. Oh, I missed all those questions. Oh, wow. I have VLO. Fonz want to look at VLO. Dirtbag Online, PLTR, bearish divergent on 30-minute chart. Thoughts? All right, Dirtbag. Interesting name. Now, there's a reason why I don't like PLTR. Okay, PLTR. Well, now there's 2 reasons why I don't like PLTR. First reason, number 1, is at a high of the year. You see it way up there? Yeah, I don't jump on high of the year, but that's not the only reason. The main reason I don't like PLTR, there are no dividends in the selected time period. All right, so Dirtbag, sorry. PLTR has no dividends. So I'm kind of curious what you're thinking when you come to a channel that says, right up here in the top corner, dividend investing for weekly cash flow, and you throw out PLTR, which doesn't have dividends. A little bit of a disconnect there. You're asking me to look at a non-dividend stock on a dividend investing channel. Yeah, I'm sorry, but that's going to be no. All right. Jeff, Bama Redneck, Jeffries. You want to take a look at Jeffries, huh? That's on Warren Buffett's list. Sorry, that's going to be a no. Even though it's on Warren Buffett's list. 2 reasons. High, and it's a monthly. I don't like monthlies because they just don't pay that much. Okay, they do pay, and you could hypothetically look at a 55. The 55 is going for 95 cents. 55 cents, you gotta deduct 77 cents off of there. That's 8. Is that right? Can those numbers be right? Seriously? It's at 90, it's at 57. It's at 55.77. The 55s are going for 95 cents. Well, that sounds good, but you got to deduct the 77 cents off of the 95. And then what are you coming up with? You're coming up with 18 cents. So why? No, the numbers just don't work. I want 1% per week. 18 cents on a $55 stock, that's not even close. Okay, I've never seen a decent monthly optionable stock. I haven't. Okay, they pay 1 to 2%. Well, 1 to 2% is great, but then you're making 12 to 24% per year. Okay, fine. 12 to 24%, really not that bad if you think about it. Because where else can you get 12 to 24% consistently? But I like weekly options. And if I'm looking at a weekly optional stock and it gives me 1% per week, well, that's 52% per year. So then why would I bother looking at monthlies if they don't pay as much? It's just an, I hate to say it's elementary, but it's actually a simple question. You know, if you're getting between 12 and 24% using monthlies, well, great, fine, dandy. But they're hard to judge. Number one, if I'm wrong, I've got to hold it for 4 weeks to make an adjustment, because that's all they do every 4 weeks, or, you know, the third Friday of every day. Okay, bill to pay. Thanks, man. Alrighty. In touch with nature. You like the cues, huh? 1, 2, 3. Now, don't get me wrong. Some people like the cues. I don't, and I'm going to have a few reasons why. You ready? Reason number one, it's $450 a share. Just a smidge more than I can afford. Okay, now we're all at a different level. There's about 200 of us here tonight. We all have a different amount of money to play with. Now, if you can afford 1,000 shares at $450 per share, that's $450,000 for one position. If you can afford that, hey, more power to you. A little bit out of my price range. That's number one. Number two, let's take a look at the Qs and some of the financial numbers which you should be looking at. Okay? Now, one of the reasons why I don't like the Qs, well, let's take a look at the dividends. Okay? Let's go back to 2008. 2008, it was paying 3 cents per share. Then it jumped to 4, 5, 4, 4, 7, 5, 9, 9, 11, 8, 12, 10, 16, 5, 11, 14, 20, 37, 16, 22, 24, 37, 21, 25, 26, 34, 32, 29, 27, 38, 32. There's no consistency here whatsoever. It goes up, it goes down, it goes up, it goes down. No consistency at all. Okay, what makes matters even worse with the Qs, let's move over to here, with the summary. Now, you like the Qs. Cool beans. Do you understand what a yield is? A yield is your rate of return. So if you take 1,000, 5,000, 50,000, 100,000, put it someplace, and they give you a rate of return, that is your yield. Well, check out what the Qs are offering. 0.61, not 6.1, 0.61. That's a tiny bit over 0.5% for the year. So, in touch with nature, what the hell are you thinking putting your money in, getting a little over 0.5% per year? Well, it's your money. You can do what you want. I mean, if you got millions upon millions and you only need 0.5% per year to live comfortably, more power to you. Good for you. You did something, or someone did something for you, or one way or another you got into a fortunate situation where you can live off of 0.5% per year. Good for you. Me, sorry, can't do that. I guess I'm going to have to admit that I am less than you, because I don't have the kind of money that would allow me to live off of 0.5% per year. Okay? Sorry. Qs for me is a no. Couple of reasons. Number one, it's out of my price range. which we already figured that one out. Number two, they're only offering 0.5%. Number three, the dividends are all over, not the dividends, sorry. The dividends. The dividends are all over the place. There's no consistency with the increase. They go up, they go down, they go up, they go down, they go up, they go down. No consistency. I like companies that are consistent. I'll show you one really quick and you might be able to understand why I like this. All right, first thing I want to do is I want to look at dividends only. Then I want to look at the maximum amount, and I want to go back a couple years. No way! What did you say? What does no way have to say? Come on. What do you think of Gerald Celente? Have no idea who the heck he is. All right? All right, let's take a look. This is Microsoft, okay, MSFT. Now, I'm not saying to buy Microsoft. I'm just saying see the difference in the dividends between a company that I consider as a good one and the Qs. The Qs, the dividends are all over the place. No consistency whatsoever. And the rate of return you're getting is a little over 0.5% for the year. Okay, Microsoft, check it out. 2005, 8 cents. 9 cents, 10, 11, 13, 16, 20, 23, 28, 31, 39, 42, 46, 51, 56, 62, 68, 75. That's consistently going up every single year, year after year after year, consistently going up. Now, I can always jump in and pull up something like, here we go, J&J. Now, Johnson & Johnson has been increasing their dividends for 50 years or more. Look at this, 4 cents, 5 cents, 6, 7, 8, 10, 11, 13, 14, 16, 18, 21, 24, 29, 33, 38, 42, 46, 49, 54, 57, 61, 66, 70, 75, 80, 84, 90, 95, 101, 105, 106, 113, 119, 124. Do you see what I'm saying? My only thing that I'm looking for, main thing that I'm looking for, is consistent increased dividends, which means consistently profitable. Because if you're taking all the profits the company makes, X amount goes towards paying all the hard costs, you know, the electric, the leases, the taxes, all that kind of crap. One part of that goes to all the employees, and another part goes towards manufacturing, all whatever cost of goods, blah, blah, blah. But there's one section in there that goes to the investors, okay? And if that section gets higher and higher and higher every year, well, that's kind of a shortcut. Now I don't have to read all those annual reports. I don't have to read all those newspaper articles. I don't have to do anything other than look at the dividend. If the dividend goes higher and higher and higher and higher and higher consistently, well, that's all I need for me. You guys got to figure out what's right for you. So I like increased dividends. Qs, that's a no. Sorry. Oh, I got 60 questions. Holy cow. Dirtbag, please look at Disney. Disney is on the list, and I think Disney was a yes for this week. Yep, we got Disney written down and circled for this week. So Disney's a good one. We will take a look at it. Let me finish up with some of these questions first before we take a look at Disney. Okay, Zach, you want to look at PSEC, huh? P-S-E-C. All right, let me go through some of these questions. PSX, isn't that Phillips 66? PSX. Isaac, what are you looking at buying this week? Isaac, we're going to go over that in a little bit. Come on. My question, that doesn't want to move. Intel. Ooh, I like Intel. I-N-T-E-L. All right, Intel's on the list. 27 possibly. Justin's Everyday Trading Limited. Okay, Justin, I have no idea what we're talking about. I was actually looking at GBP. Looks like the unemployment rates is going under soon. All right, what is GPB? GBP. All right, we'll take a gander at that one. Ooh, Joe Beef. Trading is for suckers. Ooh, I like that. I might get that onto a t-shirt. Just everyone's trading. What site is that? Well, that's Yahoo Finance. Let's get out of that one. Buffett stock COF is a good setup. Yep, Capital One Finance. I like that one. COF. I made a nice chunk of change on Capital One Finance earlier. Selling covered derivatives can generate capital similar to dividends as well. Well, USA 29, that's a cool idea. You do credit debit spreads too? Asked Jeeves. Sure. Now we're talking. Way to go. What site is that again? This is Think or Swim. It's not a site, it's actual traded platform. The other site was Yahoo Finance. That gives me all the information. Pat, do I like VICI? Well, interesting thing about VICI, Pat. Okay, VICI, never heard of it. So I've been trading for over 20 years. So if there's a stock that I've never heard of, it's most likely going to be a no. VICI. VICI Properties REIT. Yeah, that's a no. Sorry, dude. Oh, Bama Rock, going past that one. What's my best weekly dividend? That'd be Macy's. Pat, 5.21% yield monthly. Ooh, well, that's cool. Okay, Pat. Rotary Garrity, keep watching. He gets 1% or better every week on premiums. It will click. Just keep watching. Thank you. Coffee Break Logistics. Ooh, Coffee Break Logistics. I haven't heard from you in a while. I got 1,000 shares of Kohl's. What strategy do you recommend? Well, Coffee Break Logistics. Number one, I believe we did have a conversation because I do remember calling you. I honestly couldn't give you a strategy to do because I'm not 100% sure what it is you're looking for. And considering I don't know very much about what your goals are or what your risk factors are or your risk parameters, however you want to put it, I honestly can't give you a recommendation. But if you got 1,000 shares of Kohl's, KSS, Kohl's is at 2020 at the moment and it's trading for 2041. See, 2041 is what the number is, okay? Here's the high, here's the low, here's where it was, here's where it is, here's the direction that it's going, all right? And what is it paying? Well, the 2041, the closest one is going to be the 2050. That's 39 cents. Well, let's bust out our calculator and find out. 39 cents divided by 2041, that's 1.9%. That is for Kohl's, all right, at this moment in time. If I want to buy it first thing in the morning, buy it at $20.41, sell a covered call, one of the safest trading strategies that is. You buy the stock, you sell the option, kind of give someone else the right to buy it for the exact same price you just paid for it. But in this situation, if I'm going to buy it at 2041, sell the 2050 for 39 cents, well, that's almost 2%, that 39 cents. But here's the kicker. If it goes above 2050, well, right now it's at 2020. If it goes above 2050, I'm going to get an additional 9 cents per share. So that's 48 cents per share that I'm getting, and that's close to 3% for the week. I only like investing weekly. Jump in on Monday, be out on Friday. Grab that 1%. 1% a week comes to over 50% per year. It's a simple, safe, predictable, and consistent strategy. But the biggest question you should be asking yourself, there's a couple of them. Number one is, does it make sense? That's number one. Number two, do I like this stock at this price at this moment in time? And am I willing to hold on to it in case I had to? Wayne, PM, Philip Morris, O, and Altria. Well, Philip Morris, yes. O, was that Realty Income? No. Altria? Yes. So let me write down Philip Morris and Altria. I'm not going to look at O. O's are worthless to me. PM and MO. So, Wayne, considering you're new, I'm going to show you why I don't like O Realty. All right, here we go. O Realty. Reason number one, it's monthly. No matter how you slice it, it's just not worth it, in my humble opinion. Okay? If it works for you, great. I don't like monthlies, they just don't pay. Reason number two, it's at the high of the year. I don't buy at the high, wait for it to go higher. But wait, it gets worse. So let's go on over to historical data. We'll put in O Realty, and we'll see how their dividends look. Okay, number one, O Realty has been paying dividends. Holy cow, it goes all the way back. All the way back to 1994. Imagine that. Okay, so 1994, it was at 7 cents. 95, it was at 7 cents. 96, they jumped up to 8. 97, still at 8. 98, still at 8. 99, still at 8. So 3 years in a row, they didn't increase. Okay, well, that was over 20 years ago. Okay, 1999, they're up to 9 cents. 2000, they're still at 9 cents. 2001, still at 9 cents. 2002, still at 9 cents. 2003, still at 9 cents. 2004, they go up to 10 cents, up to 11. Now from 11, which was in 2004, 2005, still at 11. Okay, 2006, they're up to 12. 2007, 13. 2009, 14. They stayed at 14. Holy cow. Is that right? 2008, 14. 2008 to 2012, still at 14. They didn't increase at all, which tells me they didn't make any money over and above what they made 3 years ago. So no increase in dividends whatsoever. So then it goes to 15, goes to 18, stays at 18 for a while. Holy cow, stayed at 18 for quite a while. Then jumped to 19, then to 20, to 21, 22, 23, 25, 26. Okay. So they don't increase consistently. Okay? That's one. So that's like, giving someone some money and saying, hey, this is what we're doing, and yeah, we're only making this amount this year. Well, next year you made the same amount. Next year they made the same amount. So 2, 3, 4 years in a row, they don't increase their dividends. Okay, so, but wait, it gets worse. So you're going to dump all your money into O, or some of your money into O. Okay, number one, they don't increase consistently on their dividends, so they're not consistently profitable. If they were consistently profitable, well, they would increase their dividends consistently. This company doesn't. But look what they do offer you. They offer you 5.2%. 5.2. Okay, so I'm showing you simple, easy, safe strategies to get 1% per week. And you want to put your money into O Realty, who doesn't increase their dividends, number one. Number two, it's a monthly optional stock, which means I cannot get weekly cash flow from it. Number three, it's at the high of the year. Number four, they offer you 5.2% for the year. Explain it to me in a manner in which I would understand why you think this is a good investment. Now, Philip Morris and Altria is a different story. Those do have weekly options. And I know Altria is a dividend king. Now, Altria has increased its dividends for 50, that's 5 decades, 50 consecutive years. So I got no problem whatsoever with Altria. Philip Morris, I'm not 100% sure how consistent they are with their increased dividends, but I know it's a hell of a lot better than O Realty. All right, let's get back to looking at some stocks. That's why I don't like O Realty. There's a bunch of them. So don't think it's just Realty. SCHD, JEPI, JEPQ. There's a whole bunch of them that have crappy, in my humble opinion. Coffee break. C, I bought them. Logistics and S and C. I bought them at 22.01. Cool beans. Lucky Larry. What do I think about ADM? Archer Daniels? I love Archer Daniels. Okay, Archer Daniels is another dividend king. We'll put ADM down. ADM. We'll take a look at that in a little bit. Nugman, what is your take on dividends, meaning the companies isn't reinvesting those funds? Okay, well, Nugman, you know, there's absolutely nothing wrong with that whatsoever. Now, we went over this a little while ago. Okay, there's 9,600 different companies in the stock market consistently. Okay, half of them put all their profits back into the company to increase the value. Okay, the other half, well, they take the profits and give them to the shareholders. Okay, it's up to you and me to figure out where you want to invest your money. You want to invest your money into a company that increases its value and doesn't pay out anything? Well, fine, that's great for you. Okay, I'm not at that point in my life. I'm at the point in my life where I need cash flow. Okay, human beings are the only species on this planet that actually have to pay to live here. All right, so to pay to live here, and if I want the niceties in life, electricity, television, computer, you know, decent clothes, a decent vehicle, a nice, comfortable living experience. If I want those kind of things, well, I got to pay for those on a monthly basis. So where's my money going to come from? Well, if I work for a living, well, that's where my money going to come from. But what happens when you retire? Where's your money going to come from? Your money's going to come from your investments. So whatever your investments are, once you retire, you still need to have some cash flow coming in. So I have my little chunk of change, right? Sit over here, and I get 1% per week. That 1% per week is through dividend stock companies, companies that share their profits. All right? So I'm not quite sure what the question is. What is your take on dividends, meaning the companies isn't reinvesting those funds? Well, I think that's great because they're taking those funds, those profits, and giving it back to the shareholders. Because shareholders that invest in dividend stocks, well, they're looking for cash flow. They want to invest their money and they want some kind of return. Some people have no problem putting their money into a company, wait 4, 5, 10, 20, 30 years for the company to increase, then you can sell it for a higher price. Well, yeah, that's not me. If that's what you're looking for, you're in the wrong place, dude. You know, simple as that. If you're looking for capital appreciation through stocks going up in value, you're in the wrong place. I'm looking for safe, predictable, consistent cash flow through dividend stocks. Those are companies that take the profits and give it back to the investors. That's you and me. We are the investors. We buy and we sell stocks. We become the investors. So that's what I'm looking for, and I'm not quite sure what you mean by that. Oh, made. IOVA. You've got to be kidding me. IOVA. Yeah. IOVA. Never heard of them. Okay? Now, there's probably a reason why I've never heard of IOVA. So let's go. IOVA. Okay, I want to take a look. Iovance Biotherapeutic, yeah, whatever. It has no dividends, dude. That's a hell no. Okay, when I say, you know, dividend investing for weekly, it's right up here in the top left corner. Dividend investing for weekly cash flow, and you throw out something that doesn't have dividends, how am I supposed to react to that? It's no. All right. I literally... Jerry, thank you for that. I don't. It's not that I hate it. It's just I would never invest in it. Okay, I wouldn't suggest anyone else investing it. Look at the numbers. Numbers don't lie. If you're taking all your money and you're investing it into O, and O's paying you 5% per year, hey, if you're okay with it, more power to you. All right? I personally prefer 50% per year over 5% per year any day of the week. I can be, one eye and one arm behind my back, standing on one leg and playing hopscotch. I'd still prefer anything that has consistent dividends, consistent weekly cash flow over O. So, and there's a lot of companies I feel that way about because it just doesn't work for me. If it works for you, more power to you. I like monthly dividends. What do you think? I like the monthly dividends, but he thinks it's evil. Well, Jerry, all right, think of it this way. I don't even know why I'm bothering with this. You want to invest your money at 5% a year, hey, more power to you. Okay? All right, Jalix, keep watching. He buys on Monday at the money for the minimum 1% premium. Hopefully back out by Friday. Yep. Okay, so are we buying and selling or are we talking buying and holding? No. We're buying and selling, dude. Okay? Now, I have a roster of about 300 companies. All right? Let me quickly go over to the Market Watch and go right here. And we're going to take a look. Okay, now this list here is a decent set of companies. Let's take a look at them. Ally Bank, Aon, ATVI, Wells Fargo, Capital One Finance, DHI, UPS, Jeffries, Apple, Visa, Louisiana Pacific Railroad, Siri, Kroger, Heimlich and Payne, Chevron, Moody's, Johnson & Johnson, DEO. I have no idea who that is. Isn't that weird? I have no idea who DEO is. Bank of America, General Motors, and Kraft Heinz. That's Warren Buffett's list. I never question what's on Warren Buffett's list. Each one of these green dots represents when the dividend is being paid out or the EX dividend date. That tells me when to buy. I have 300 companies thrown up in here. Okay? In the calendar, that tells me when to look at a company. Because here's the funny thing that you may or may not know. Stocks have a tendency to increase in value, means the stock price goes up just before the EX date. See the little green dot? That is the EX date, the last day the stock trades before the dividend is paid. Once the dividend is paid, well, we got to wait another 90 days for them to pay another dividend. All right? I get no problem whatsoever. Heimlich and Payne, Chevron, Moody's, Johnson & Johnson. Okay, if I want to collect the dividend on Johnson & Johnson, it's paying on the 25th. Okay, the 24th, 23rd, 17th, 8th, 2nd, 1st. Any day before the little green dot, I get to collect that dividend. But why do I want to collect the dividend if 2 weeks before the 25th on a Monday, 7th, if I buy the stock and the stock price goes up, because stocks have a tendency to go up in value just before the dividend date. That's why it says dividend investing for weekly cash flow. Dividends, along with weekly options, allows me to jump in and as the stock is increasing before the dividend, sell a covered call to be able to get that 1% per week. Dennis, you want to take a look at Ford? Dennis wants to take a look at Ford. Here we go. First thing I always want to see, high, low, where was it, where is it going? Okay, now once I figured that out, it's not at the high, it's not at the absolute bottom, it's somewhere in between. Alrighty, so $10.10, that's what I can buy it for. I mean, hell, I know high school students that can buy it at $10.10. The $10 is going for 22 cents. Well, I'm losing 10 cents off the top. You subtract it from the 22, I'm walking away with 12 cents. 12 cents doesn't sound like a lot, but 12 cents is more than 1% of Ford. But is it the right time to buy? A year ago, Ford was at $12.10. Okay, the high of the year was $14.88, and that was in the middle of July. Well, from that, look where she is now. The 30-day bottom was on the 5th, which was Monday. There's your 30-day bottom. A 30-day high, 30-day bottom, 1, 2, 3, 4 days to the upside. Where's your invitation? You got a gap down right here. If you're not aware of gap downs, they have a tendency to fill, which means this is going to come back up this way eventually. We're talking about Ford. This company's been in business for over 100 years. Okay, why isn't it on your roster? Okay, you may not like it at $10.10, but at $10.10, I could sell it to someone else for $10, collect 22 cents, and then that's over 1% for the week. I'm looking for 1% per week. 1% per week is over 50% per year. Ford, it's a 100-year-old company. I don't think it's going to disappear anytime soon. All righty. Bemarok, Jeff, Jerry, you lying. Okay, I get half of that one. RITFL. Okay, I get, laughing my ass off. I get that one. Rolling on the floor. What is that I? Rolling in the floor? Laughing my ass off? I suppose to see ROTFLMOMAO. But anyway, I get it. Lucky, Target looks promising. Ooh, we'll write Target down. Hold on a second. TGT. Bram, all right. I want to see you do that. Corey, I have no idea what you're talking about. Did I miss AEO? I didn't do AEO yet. I'll write it down. AEO. I think I got rid of my AEO this week. I'm not sure. Did I? Nope. I rolled it forward. Is that what Warren Buffett does? No, Warren Buffett does something totally different. Is 6% a good dividend? Dog, I'm not 100% sure what you mean by that. Okay, 6% dividend is kind of nice, but what are you planning on doing? Okay, what is that 6% dividend doing? I mean, is that 6% for the year, 6% for the month, 6% for the quarter? Michael, how much premium have you collected on AEO since you had it for the last 5 months? Ooh, that's a good question. I'd have to do some research on that one. It's a little bit more difficult to figure it out. Okay, Night of the Holy One. Got $10,000 cash. What is the best thing to do? Pizza party! We're all having a pizza party at night at the Holy One. Dude, I don't know anything at all about you. If you want to send me your phone number, I'll give you a call. We can chat. Okay? But it's a good start. I'm looking for 1% per week. 1% per week on $10,000. It's only $100 a week. But at the end of the year, that's over $5,000. It's 50%. What company was that behind you? That was Ford. Michael David, don't waste your time, James, on people that don't want to take the time to understand. All right. And are combative. Yep, I get that. Bram. One, go to Vegas, my friend. There you go. Dividends are just an indicator, like other people use other indicators, and also a nice present sometimes. Bram, seriously, dude. Okay, all right. I'm really seeking advice on stocks. Okay, the Night of the Holy One. I already suggested. Hold on a second. I'm going to do it right here so you catch it. All right, so here we go. Here's my personal opinion, comma. DM me your phone number. I will give you a call and we will chat. That way I have a better understanding what you're looking for. There you go. Send you a message. All right. From one brother to another. Way to go. I just sent you some advice. That's my opinion. Thanks. I am intrigued by how do you do this. I only have a simple IRA. Well, the interesting thing about simple IRAs is a covered call is one of the safest trading strategies there is. And you can do it in an IRA. What do you think about Nike? Ooh, Grateful Dad. I like Nike. I do. Let's write Nike down. NKE. All right, I got a few more questions to go, then we'll take a look at some more stocks. Majority of these dividends are like pennies each quarter. Is this what you mean by investing? Amy. All right, Amy, you're absolutely right. Some of them are, but here's the thing. All right, if you have a company, all right, think about this. If you're going to invest your money, okay, because that's what we're doing here. We're investing our money for the best possible returns we can get. Great. Everybody has their idea of what they think is best for them. I'm just sharing my idea. Now, correct me if I'm wrong, because I have no problem whatsoever admitting if I am wrong. If a company consistently profitable every single year for 20 years. Now remember, most companies don't make it 3 to 5 years. 1 in 100 make it to 10 years. 1 in 1,000 will make it to 20 years. But I'm not talking making it to 20 years. I'm talking about making it to 20 years and consistently increasing the profits that they give to the shareholders. So once you start buying and selling stocks, you become a shareholder. Where you want to put your money is totally up to you. I'm just telling you where I want to put mine. I put mine in a company that is consistently profitable. Now there's 300 companies that have consistently increased their dividends every single year for 20 years or more. So that's where I want to put my money. Now, there's more than 300 companies that increase for more than 20 years, but there's only about 300 that have increased for 20 years and have weekly options. Now, the reason I want weekly options is because I want to be able to do a covered call every single week. Now, I've been doing this long enough, it takes me literally 10, 15 minutes to decide. Let me show you really quickly. Maybe you might grasp this. Alrighty. Now, August 2024. Here we are. Here's the date right here. August 2024. Okay, it is 8/11, which is tonight. The 11th right here. Next week. Okay, check this out. Next week. Apple, Capital One Finance, PPG, US Steel, Clorox, Kroger, Exxon Mobil, Emerson Electric, Hershey's, RTX, Starbucks, and Walmart. Those are the only companies I want to look at tomorrow, hypothetically. Only. I do not want to take a look at Baxter, eBay, Nextera Energy, GLW, that's Corning, Walgreens, Target, Aflac, ADM. I don't want to look at anything else except for the ones that have their dividend coming up. Why? Because they have their dividend coming up, stocks have a tendency to go up in value. It's just historical performance. So let's go back here real quick. I might be able to show you something. Okay, we'll put in Microsoft, and we're going to look up historical data. Dividends. Whoops, no. Historical data. Okay. Let's find a dividend. Hold on, where is one? Okay, right here. Okay, see the date? May 15th, 2024. The dividend is 75 cents. Okay, let's go 10 days before the EX date. The first column is the date. Second column is the opening price of the day. Third column is the high price of the day. Fourth column, fourth column is the low price of the day, the adjusted close, the adjusted close, and then the volume. Okay, what I want to show you is the dividend on the date, 10 days, 2, 4, 6, 8, 10, 397.66. See that? May 2nd, 2024, 10 days before the dividend, 397.66. Well, the high of the day, 399, 407, 413, 414, 418, 417, 423. Stocks have a tendency to go up before the dividend. That was just one. I can go down and show you a few more. Well, that's Microsoft. I can show you a few more stocks. But if you only look at stocks that continuously move up before they pay their dividend, well, that's excellent information to have. Because if I'm looking at these companies here, Johnson & Johnson, Key, Archer Daniels, Aflac, Target, Walgreens, Intel, Ford, Kinder Morgan, Citigroup, Wells Fargo, British Petroleum, IBM, Siri, Visa. Is there any company that you've never heard of? Probably not. You probably heard of each and every single one of those companies. Now, each and every single one of those companies have increased their dividends consistently. This is my personal, well, one of my personal lists. I do not ever question whether or not I like the company. If it is on this list, that means I've already done the work. Okay, this just tells me when to look at it. Okay, great. So that's what I'm going to look at. What am I looking at? Well, first thing I'm looking at is, hold on, let's back this up a little bit. Very first thing I'm looking at, always, 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 the 1 year chart. Where's the high? Where's the low? Where was it a year ago? Where is it now? And which direction is it going? That's first. It takes 2 or 3 seconds. High, low, was, is, and direction. Great. Next, I want to take a look at what am I paying for it? Well, at the very top, you're seeing all the information on the stock. The last trade, the bid, the ask, the volume, the open, the high, the low, the close. That's all the information you need on the stock. Okay? I can buy it at $10.10 first thing tomorrow morning. If I do a covered call, and a covered call is one of the safest strategies there are. You buy the stock, you sell an option for someone to buy it from you for the exact same price. If I'm buying it for $10.10, I'm selling it for $10. I'm losing 10 cents off the top, but I'm collecting 22 cents. Okay, and 22 cents after I take the 10 cents off, so I'm walking away with 12 cents per share. 12 cents is more than 1% of $10. That's all I'm looking for. I'm looking for a good quality stock. Ford, been in business for over 100 years. I don't think they're going anywhere. Okay, I'm buying it at the right time. Okay, 30-day high, 30-day bottom, 1, 2, 3, 4 days to the upside. You're not going to get any lower than the low of the 30-day time frame. Okay, 30-day high, 30-day low. You make your money in the stock market when you buy low and sell high. Okay, am I going to make money when I buy it at the high and wait for it to go higher? No. There's no guarantee it will go higher. Okay, there is what is called a book value. Book value on a company right there, well, $10.76 a share. Okay, that is the actual value for Ford at this moment in time. It has earnings per share, $1.08 per share. That's what their earnings are. That's what their profit is. Okay, their book value is less than the current stock, is higher than the current stock price. So if you buy it now, the company goes bankrupt, liquidates everything, they pay you off, you're getting more than what you're paid for. Because if you're paying $10.10 when the company's actually worth $10.76, well, that's kind of like a no-brainer for me. All right, Dennis, you want to take a look at General Motors? GM. Interesting, interesting. Remember, first thing I want to see. High, low, was, is, direction, great. Now look at the numbers. Right now, 43.50. The 43.50, 69 cents. Well, how much is that? Clear. 69 cents divided by 43.50. 43.5 equals 1.58%. Okay. So ask yourself a question. Do I like General Motors if General Motors is going to pay me 1.58% just for 1 week? Well, hell yeah, I like that. And what does the chart say? Well, the chart says, well, here's the high in July. Where's the bottom? Well, the bottom was in November. Nice run up. That's a nice run up. Okay, and then you had your profit taken. You get run up like that, yeah, you're going to have a profit taken. Okay, so I'm going to go back a little bit. 8, 9, the 11th. Right there, we go. 30-day chart, 30 days ago, 47. Hits 51 for the 30-day high. Comes all the way down here, 39. From 51 to 39, that was the drop. Okay, she went up all that way. People started taking profits. Okay, I'll tell you one thing right now. If I see a profit over 5% or 10%, hell yeah, I'm taking it. Because it's not a profit until you actually take it. All right? It may look good on paper, but that piece of paper ain't going to help you pay for your mortgage, ain't going to help you pay for your gas, ain't going to help pay for your groceries. But you know what will help you? Profit. Nobody ever went broke taking profits. Profits are better than wages. So I try to tell my kids, profits are better than wages. Because wages you got to work for. Profits, I got to hit a couple of buttons. Boom, there you go. All right, so if I buy it at $43.50, selling at $43.50, the exact same price I paid for it. And what does the stock have to do by Friday? It's got to stay exactly where it is, $43.50. And if it stays exactly where it is, I make 1.58% for the week. 1.58% for the week is over 75% for the year. And I'm averaging over 1% every single week. As a matter of fact, let's take a quick look because some of you here haven't seen it yet. Here we go, right here. This is my website, the 10-Minute Trader. These are all my trades that I've made so far for this year. Now, I list all my trades on 2 accounts. I have 6. I only show you guys 2. Okay, I'm a nice guy, but I have to draw the line somewhere. Week number 1, which was January 2024. Okay, account number 1, 2.12%. Account number 2, 2.99%. Week number 2, 1.3%. Account number 2, 2.43. 0.85. I didn't hit my 1% this week. See, what did I have? This week I had Clorox, General Motors, Capital One Finance, Ford, and Macy's. Okay, I didn't make my 1%, I only made 0.85. Boo-hoo for me. Okay, account number 2, 1.35. What did I have? General Motors, Comcast, Wells Fargo, Morgan Stanley, and Ford. But if you keep going all the way up, 0.9, 1.03, 1.06, 1.9, 2.03, 2.32, 4.63. Check that one out. 4.63. Macy's, Hewlett Packard, and 3M. I made 4.63 that week. 3.9. What did I have there? Kohl's, Albemarle, Paramount, JW at Nordstrom's, Ford, Nordstrom's, and NYCB. Oh, yeah. Okay, so on and so forth. All my trades are listed there. Okay? You can take a look at all my past trades since the beginning of the year. 0.6. Ooh, that was like my worst week right there. 0.6. Intel, Kohl's, Win. I only made 0.6 this week, and I only made 0.6 this week. Intel, Marathon, Win, Kohl's, MPW. Okay, but if you go all the way up to the top, okay, account number 1 started out at the beginning of the year, 117. Okay, I deposited another 21, so current balance is 142. I've taken out almost $30,000 already. Look at my interest so far, 46.1 year to date, and I haven't calculated the last couple of weeks. Okay, I've been kind of busy. All right, account number 2, $100,000 cash. At this moment in time, it's at 167. Currently, my rate of return, 69.5 for account number 2. That's the margin account. I do not suggest you do a margin account until you understand what it is. Account number 3, this one's brand new. Okay, 9.5% so far in about 4 weeks. So what was at 100, now it's at 132. And that was like a couple of weeks. Look, there's week 32, week 31, week 30, 28, 29, 28. Yep, right there, week 28. Look at that, week 28, 3.84% in this account. Okay, Macy's, Kohl's, MPW. 2.12, 2.67, 2.86. I haven't done this one and haven't done that one and haven't done this one yet. Okay, so, you know, I got to get around to it. So, yeah, I'm looking for a safe, consistent, predictable 1% per week. I have 6 accounts. I share 3 of them with you guys. Okay, I don't hide anything. It's simple, it's easy, it's predictable. Now let me show you where it came from because I haven't done my disclaimers yet. All right, Dennis, we'll take a look at Macy's in a little bit. I haven't done my disclaimers yet, so let me do that. First and foremost, I'm basically a nobody. The only license I actually hold is a license to drive a car or a motorcycle. That's it. Didn't go to college. I drove by a few colleges. I don't think it works through osmosis. Really don't. Okay, I took the what do you call it? The path less traveled. I got out of high school, went in the service, got out of the service, and then I started my own business. I worked for a guy, got promoted, blah, 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 all kind of nice neat stuff. So I don't have any professional licenses. I'm not an accountant, I'm not a bookkeeper, I'm not a lawyer, I'm not a financial advisor. I'm basically a nobody. Somebody that I came up with an interesting product. I went door to door selling it, and I actually made a lot of money. They kept throwing money at me, so I had to figure out what to do with it. I went to the stock market. I lost a lot of money. I made a lot of money. But then when my daughter was 9 years old back in 2008, she said, Daddy, can I do what you're doing? Can you show me? Here's my challenge. 9 years old. It had to be simple. It had to be safe. It had to be predictable, consistent, and no way she could lose. If she lost money, what do you think is going to happen? She's going to cry. I'm going to feel like crap. And it gets worse. The wife gets involved, and I'm sleeping on the couch for the next couple weeks. No. Simple, safe, predictable, consistent, and no way for her to lose. Great. 5 rules. And I'm very strict with these rules. Number 1, never buy something you do not understand or you do not want to hold long term. Always go into buying something as if you're going to hold it long term. I get no problem whatsoever buying General Motors and holding on to it. I want to hold on to it until I hit my stock price. For me, 5 days, great. Rule number 2, never sell at a loss. It defeats the purpose of investing in the first place. Okay, and if you're thinking of selling at a loss, well, you didn't pay attention to rule number 1. Okay, rule number 1, never buy something you do not understand or you don't want to hold on to. Number 2, never sell at a loss. Number three, make sure the company has increased dividends. It's a way of showing that they're profitable. If they're profitable, fine. How consistently are they profitable? I like 20 years of increased dividends. Okay, there's about 300 companies that fit that description. Weekly options. I want to get paid weekly. This is just me. You guys can do whatever you want. I want weekly income. Safe, predictable, consistent, 1% per week. And rule number 5, make sure the numbers work. Simple rules. Never buy something you don't understand. Never sell at a loss. Make sure there's plenty of increased dividends. I personally like 20 years. Weekly options, and make sure the numbers work. What are the numbers? What am I buying it for? What's the covered call? What am I selling for? What am I collecting? And are the charts telling me yes? Up, down, up. Here's the 30-day bottom, 30-day top, 30-day bottom, 1, 2, 3, 4. I like 2 days to the upside, personally, before I jump in. This one's got 4. So the question is, why don't you have General Motors? They've been in business for over 100 years, okay? They get government contracts when we go to war. We've been to war, what? World War I, World War II, Korea, Vietnam. Okay, Ford, General Motors, they got a whole bunch of money from the government. Okay, and they've been around for over, yeah, never mind. Let's keep moving. Can you please do Intel? Tractor Supply. I'm going to say no to Tractor Supply. Wait a minute. Night of the Holy One. You got to give me the ticker symbol, dude. I don't know the ticker symbol for Tractor Supply. But Intel, I like Intel. INTC. First thing, as always, high, low, where was it, where is it? This is kind of interesting because this is where we are right now. Look at this big gap down. If you see the stock, it's usually here and up. Why did it crash down to here? And if it did crash down here, what's it going to take for it to go from here back up to where it's supposed to be? All right? Second, what am I buying it for? 1980. Well, 1980, the closest one is going to be 20. Okay? 20 is going for 34 cents. Well, that's over 1.5%. I don't even need the calculator to figure out that one. It's Intel. So, a year ago, Intel's sitting at 34.44, topped off at 51.21 back in December. Look at the last 30 days. 30 days ago, well, not quite 30 days ago, We got a high at 37.16. Look at your 37.16, big gap. Here's your bottom. 1 day to the top. I like 2 days to the top. So if Monday's a second day to the top, well then Tuesday's the day to jump in. That's it. Okay, so the question is, do I like Intel at 1980? Well, of course I do. I do. That's the question you guys got to ask yourself. Do you like Intel at 1980? Well, if you buy it at 1980, sell someone the rights to buy it from you at 20, you're going to collect 34 cents. And I know 34 cents doesn't sound like a lot, but it is more than 1.5%. 1.5% if you do that every single week. That's over 75% per year. If you don't like 75% per year, I really can't help you out. Sorry. Okay, this is boring and this is slow. This is the same thing over and over and over again. Tractor Supply. What is Tractor Supply? TSCO. Okay, $260. TSCO. See how often they've actually increased their dividends. Eric, I missed some of these questions over here on YouTube. I don't want you guys to think I'm not paying attention. Lucky Larry, which branch were you in? I was in the Army. Intel had bad earnings and said they were going to pause their dividend. Yeah, I get that, Eric. Thank you for that. That's something you need to take in consideration. Ace, how are you doing? Ace, we had this conversation the other day. Please don't start again. Okay, Tractor Supply, historical prices, dividends only. Let's look at the maximum amount of dividends they got. Hey, I like this. Okay, the Tractor Supply has only been paying dividends for 14 years. But listen, 4, 6, 10, 13, 16. They didn't pay any dividends in 2014. Wait a minute, yes they did. Wow, that's weird. That's a lot. February 2014, 13. April, nothing. May, 16. June, okay, 16, 20, 24, 27, 31, 35, 40, 52, 92, 103, 110. Yeah, but they only have 10 years of dividends. Okay, so do you like the fact that it only has 10 years of dividends? Okay, great. Well, what's the numbers looking like? Okay, at this moment in time, it's at 270. The 270 is going for 50 cents. I'm going to say no. Wait a second. Look at the numbers. The last traded price is 260. Bid 250, the ask 270. That doesn't work because during market hours, there's usually a 1 or 2 cent difference between the bid and the ask. So if we were going to look at the last price and go from that and use that, the 260 is going for $4. Okay, the 262 is going for 270. Okay, both of those are over 1%. But here's the thing. I hate it. I don't hate it. I dislike it. I dislike it when the market maker does that. Okay? That's a big spread. That's a $20 spread. That never happens. Wade. It's about options and collecting premiums. Sun Oil Company. Okay, I've never heard of Sun Oil Company, so I can't help you out with that one. Arrow. When is the EX date for Macy's and also Walgreens? Oh, that's an interesting question. Macy's. No, it's not in August. July. Not in July. June. April, May, June. So that's third. Okay, wait a second. 20 is 13. 13, 12, 11. Yeah, 13, 12, 11. That's in the 11th week. Okay? The 11th week of the quarter for Macy's. So Macy's is the 11th week of the quarter. Walgreens is... Nope. Not in July. No. Okay. Why is it not popping up? Oh, I didn't have the box checked off. April, May. The 21st. Okay, so we're here on the 11th. Walgreens is the 24th, 21st. So hypothetically speaking, Macy's should be somewhere around here. Okay, it's not listed yet because it's next month. Hopefully that helped you out. Tune. Are you cashing out for 1% per week on some of your trades, or is your set to... All right, wait a second. I gotta read this slower. Are you cashing out for less than 1%? No. Per week on some of your trades, or is your TP, I don't know what TP man stands for, set to 1% for each trade? I would like to get 1% for each trade, and I usually do get 1% for each trade. Every once in a while, hey, Denzel's here. Denzel, how's it going? When you sell the covered call, you're using the bid or the ask of the strike. Well, that's usually, okay, the bid, okay, if I owned it and I want to sell, that's what I can sell it for, the bid. If I do not own it and I want to buy it, the ask, okay? So when I'm buying the stock, I'm paying the ask price. When I am selling the covered call, I am collecting the bid price. I want to see you play hopscotch. Yeah. So ideally, the stock goes up and you sell. Is there a percentage increase that you sell? Interesting. User 7463. I like it better when people have names, you know, because it. All right. Let's take a look. Hypothetically speaking, all right. So ideally, the stock goes up and you sell. Not necessarily so. Okay. Now think of it this way. Currently, the stock here, General Motors, is 43.48. Right? If I buy it first thing tomorrow morning and I spend $43.50, it's right there, and I sell someone the right to buy it from me through a covered call, $43.50. It's the exact same price I paid for it. So what happens there? Well, I collect the 69 cents a share automatically, right away. So if I buy it at 9:30 a.m. tomorrow morning, as soon as the market opens, at 9:30 and 15 seconds, I sell a covered call against it and collect that 69 cents. That 69 cents goes into my account instantaneously, which means later on in the day, I can use my debit card or my credit card that is attached to my trading account to do my trading, okay? Or to do my, my average bill paying, whatever you want to call it. But if the stock stays where it is, 43.48 by the end of Friday, I still get to keep this money, and I'll end up keeping the stock because it's below the strike price that I sold, 43.50. If it hits 43.50 or higher, then somebody will buy the stock from me, and I'll have all my cash back for the following Monday. So ideally, I would like to jump in first thing Monday morning, sell a covered call, which means I buy the stock, sell the option, collect that money, and wait until Friday. When Friday comes, if it is above 43.50, great, I'm back into cash Monday. I find another company do the same thing. If it is below 43.50, okay, well, I will take it into next week and sell the 43.50s again. And then next week, I'll sell the 43.50s again and again and again. And I'll continue to collect whatever the premium is. Because remember, these numbers change every single day, every minute of every day while the market is open. Okay? So if I'm consistently collecting over 1% per week, now there are certain stocks that I continuously buy over and over and over again. One of those is Macy's. Macy's is giving me between 1% and 3% every single week since the beginning of the year. As a matter of fact, let's take a quick gander at this. Okay, just for the fun of it, let's see how many times I bought Macy's. Okay, week number 1, Macy's. Week number 2, Macy's. Week number 3, Macy's. Week number 4, Macy's. Week number 5, Macy's. Week number 6, Macy's. Week number 7, Macy's. Week number 8, Macy's. Week number 9, Macy's. Week number 10, Macy's. Week number 11, no Macy's. 12, no Macy's. 13, no Macy's. 14, Macy's. 15, Macy's. 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 No Macy's. Macy's. No Macy's. No Macy's. No Macy's. No Macy's. No Macy's. No Macy's. Macy's again. Macy's again. I haven't done those ones yet. So certain stocks, you see Macy's, MPW, there's a few of them. Or what are they? Whoops, where was I? Yeah, Kohl's, Macy's, MPW. All right, let's go back to where we were. So yeah, if a company consistently gives me more than 1% every single week, whether or not the dividend is coming up or not, yeah, I'll do it. Why not? Company's over 100 years old, you know. How often have you seen Macy's New Year's parade, Macy's Easter parade, Macy's Thanksgiving parade, Macy's 4th of July parade, Macy's Memorial Day parade, Macy's Thanksgiving parade, Macy's... Yeah, there's so many freaking holidays. And Macy's is plastered every single year, 4 or 5 times a year on the television because they're doing a parade. Well, great. Wonderful. Everyone, he only buys stocks with weekly options, no monthlies. Thanks, Bama. All right, 86, 1% profit, blah, blah, blah. All right, let's go some more questions. I'm almost done with questions. Cool beans. He buys on Mondays. Yep. Blah, blah, blah. Thanks, Mama. It's very profitable and easy. Thank you. Why did YHV to BY, BJY, and what do you say? Okay, selling stock. Okay, I have no idea what the hell he's talking about. If anyone can figure out what No Name's talking about, explain it to me slowly. All right, I think I'm basically done. Shell. 86 wants to take a look at Shell. Shell. Well, bloody righty then, here we go. First thing, always, always, always. I'm going to take a quick gander at Shell. Here's the high, here's the low. That's where it was, this is where it is. Look at what's happening right here. I want to take a closer look at that, but before I do, let's take a look at what I'm buying it for. If I'm buying it, 74.69, the closest one's going to be the 75. That's a hell no. And these numbers aren't even working because there is no last. The last is 71.88, so the 72, 70, yeah, it's not 1%. Sorry. Even if I looked at the chart, okay, look at the chart. Here's your high, here's your low, it gapped up, it gapped down, kind of messy. Yeah, Shell is not, it's not on my list, so I don't know what to tell you. All right, that being said, we're done with all the questions, so let's move on over to our stock list and take a look at some of the stocks you guys have suggested. Very first one today, LNC. I'm not sure if you did check ET yet. J.V. Boson. J.V. Boson. You want to take a look at energy transfer. I'm going to write energy transfer down. Okay, we will get to that eventually. But Shell is going to be a no. Sorry. LNC is first on the list. OXY. Dennis, you want to look at Occidental Petroleum? OXY. Okay. LNC. I don't know who came up with LNC, but let's check it out. LNC. Lincoln National Company. Yeah, that's a no. That's a monthly. Sorry, I'm not even going to take a look at it. TSM. Is that Taiwan Semiconductors? TSM? It is. Taiwan Semiconductors. Okay. Okay, high, low, where was it, where is it? Look at that movement right there. That's what I want to take a look at. iPhone storage is full. Imagine that. iPhone storage is full. Can't put any more. SMCI. Oh no. Can handle me now. Okay, can handle me now. SMCI. Do you really, I mean, think about it. Think about it really closely. You really want me to take a look at SMCI? Before I do, double check, make sure it has weekly options, and make sure it has decent dividends before I even go take a look at it, okay? No way! How's Hog since the backlash? Oh, I don't even know there was backlash on Hog. I don't see any backlash. Okay. High, low, where was it? Where is it? What direction is it going? Okay, interesting. That's if you like Harley Davidson. Well, let's take a look. Harley Davidson, 3570. 3570. Here the 35s are going for 85. That's going to be a no. The 36s are going for 35. That's a yes. That's 1%. Okay, 36s. Now let's take a look at the chart. Well, for Harley Davidson, a year ago, 3480 bottomed out at 2539. That was back in October. Topped out at 4416 towards the end of March. Okay, let's look at the last few months, the last 30 days, the 11th right here. All right, so there's no real rhyme or reason here, but let's take a look anyway. 30 days ago, we're at 33. That's a 30-day bottom. She shoots up, pulls back. Shoots up, makes a 30-day top at 38.60. Okay, top 38.60 from 33. So from 33 bottom to 38, that's a $5 move. On a $3 stock, that's just shy of 20%. Okay, if a stock goes up close to 20%, are you going to take profits? Well, I'll tell you that I am. I'm going to take profits at 5%, 10%, or 20%. Hell yeah. Because it's not a profit until you take it. And nobody ever went broke taking profits, so why the hell not? If the stock jumps up almost 20%, hell yeah. So here's your 30-day bottom. 1, 2, 3, 4 days this direction here. It should hypothetically keep going up, but it seems to be going channeling sideways. And I hate saying sideways because it doesn't go sideways. It goes up, it goes down, but it's no real reason. All right, can't handle me now. Did you take a look? Nope, hasn't looked at it yet. No, Agua, I don't do Forex, sorry. Okay, K-Dog, we already did Ford. Ford is awesome at the moment. That's not a suggestion if you do it. That's you should take a look at it. Take a look at the numbers. Take a look at the current pricing. Take a look at the movement in the current pricing. And then take a look at VYM. I never heard of VYM. Why would you want me to take a look at something I've never heard of? Okay, but back to Ford. Take a look at what you can buy it for now. Take a look at what the covered call is going for. And then make your decision. Because it's always going to come down to a decision is this stock right for me? What are we looking at? It's at 10:30. Ooh, we got another hour to go. We got an hour to go, and I'm just getting all warmed up. Now, Dennis wants to look at Occidental Petroleum. That's on Warren Buffett's list. OXY. Okay, Occidental Petroleum. First thing I want to see. The high, low, where was it? Where is it? What direction is it going? See, she's dropping, found a bottom, now she's moving back up. I want to take a look at this area right here. Because this is current. This is the current motion, the current week at this moment in time. Because we're into August. Okay? Next, I want to take a look at what am I buying it for? 58.62. The closest one is going to be the 59. The 59 is going for 47. Yeah, sorry. That's just not enough for me. Sorry, Dennis, that's less than 1%. There are too many other good quality companies. I'm not saying anything bad about Occidental Petroleum. Okay, it may be a great company. You know, it's on Warren Buffett's list. So yeah, it's on my list too because it's on Warren Buffett's list. But Even if it's telling me, buy me, buy me, buy me, it's not giving me my 1% that I'm looking for. There are too many other companies that are willing to give me a 1%. So as much as I like Occidental Petroleum, the numbers just aren't working for me. VYM, VYM. Why would you give me something that's going to be a no? Okay? Now, I'm not even quite sure you actually looked at this, because if you did look at this, you would never have suggested it, because it's a monthly optionable stock. Okay, 121.18, the 121s are going for 55 cents. What the hell would I want to do that for? That's a 0.5% for a month. And if I'm wrong, I got to hold it for another 4 weeks. Hell no. I don't do monthlies. And I'm sorry if that offends yours. There's no safe spaces here. Okay, Q wants to look at Mickey D's MCD. 267 to 268. Interesting. First thing I always want to see, take a quick look at the chart. High, low, what was it? Is it direction? It goes down, it goes up, it goes down, now it's going back up again. That's the big picture. Well, let's look at the micro picture a little closer. At 268.18, the 268, 295, 270s, 170, 18, 265. That's not quite working out right. It's close to 1%. Okay, when the numbers get like this, it's a little complicated. Not a little complicated, but 268.18, and the closest strike price is 267.50. So if I buy it at 268, it was 68 cents. You take 68 cents off of this. Yeah, then you're below 1%. Sorry, there's too many other companies giving me more than 1%. Do you see that, Q? If I'm buying it at 268.18, because that's the current price for tomorrow morning, the closest strike price is going to be the 270, but it's going for $1.78. That's a no. The 267, at 267, I'm losing 68 cents. Because the difference between the 267.50 and the 268.18 is 68 cents. You take 68 cents off of this 295, then you're into the 230 area, and 230 is not 1%. Sorry. Mickey D's is a no. Skip Bayless. Are the Celtics repeating next year? No Way wants to look at BA. Isn't that Boeing? Boeing. We'll write that down. BA. All right, next on the list, MPW. Ooh. Ford, even if they're past their EX date? Yeah. 86. It all goes by the numbers. Okay, if you like Ford, yes. If you want to wait for the dividend, then wait for it. I mean, they go up, they go down, they go up, they go down. When the dividend comes, 2 weeks before the dividend, take a look at the numbers then. It may be a yes, it may be a no. We just don't know. If your stock continues down, repeating covered calls, do you sell out when the premium price hits your point? Nick Nack Mateo. Ooh, cool name, Nick Nack Mateo. As the stock goes down, yes, I will lower it down. My name is LeBron Dinglenut III. Okay, good for you. Not quite sure what your name has to do with any of this, but all right. So, yeah, as the stock is going down, I will continue to write covered calls against it because I would like to have some type of a cash flow. Let me give you my cow analogy. My cow analogy is simple. If I buy a cow and the cow gives me a gallon of milk every week, well, yeah, I'm fine. I'm happy. I'm dandy, ducky, all that kind of nice and fun stuff. What happens if the cow gives me a half a gallon of milk? Do I get rid of it? No. What if my cow gives me a quart? Do I get rid of it? No. That's your answer. As long as the stock is going down, yes, I do sell covered calls going to the downside, but I still like to be safe. So, if I bought the stock up here at 275 and it's currently down here at 250, I would probably end up selling the 255s or the 260s. I wouldn't be selling it at the money. I'd be selling it a couple strikes out of the money for a safety factor. And yeah, I would get less than 1% in that situation. But that goes back to my cow analogy. It's better to have something than nothing. A lot of times I've had stock, as a matter of fact, I have one at this moment, BITO, B-I-T-O. That, I bought it at 30, and right now the prices are in the 20s. And it's not worth selling anything on it other than waiting for it to go back up. So yeah, it does happen. Because you're going to buy a stock and it is going to go down. Sorry, part of the game. You're also going to buy a stock and it's going to go up. Part of the game. Okay? This is a game. Don't think of it anything else other than a game. But make sure you know what you're doing. Never buy a stock you do not understand. If you cannot give me a 3 to 4 minute elevator pitch, step in front of me and say, hey, this is the company I just bought, this is what they do, this is how profitable they are, this is what their dividends are, this is the kind of covered call I'm getting on it, these are my returns, blah, 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 blah. If you can't do that, then don't buy it. If you don't understand what they do, don't buy it. McDonald's, MCD, yep, I know exactly what they do. They're into real estate. Okay, you think they're into burgers? No, 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 they're not. They're into real estate. You take a look at every McDonald's and you figure out what is the value of the dirt they're sitting on. Yeah. Okay, the burgers just helps pay the bills, but they get the big bucks from the real estate. Anyway, next, let's keep progressing. Ooh, 20 more questions. Uh-oh, I missed a bunch. Is that a daily candle on your chart? Yeah. Interesting question. I thought there'd be a little bit more meat and potatoes to that one, but all right. Flagfish on. Did you describe the scenario when things don't go as planned, and how often does that happen? Oh, it happens every single week. Okay, I'm not gonna lie to you. Every single week. Okay, here's the thing. I got 6 different accounts. I share 3 of them with you guys so you guys can see exactly what I'm doing. You will see that each account, as a matter of fact, let's go here. Dun, 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 dun. Okay. You will see here, the green is what I bought, which means I only bought 1 stock this week, and I sold 1, 2, 3. Okay? Right? So you will buy 3, 4, 5 stocks. Okay? Green, buy, sell, 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 buy, buy. Okay? You're going to buy 3 or 4 or 5 stocks on a weekly basis. All right? Some of them are going to do exactly what you want them to do. Some of them are not. All right? I'll give you a perfect example. AEO. Now, I bought AEO April 1st at $25.97. I bought more on June 11th to what they call dollar cost average down. So my first set was at 26, my second set was at 21. So my average price is at 23. Now I've held this stock since first. That's the first week of the second quarter. We are currently in the 6th week of the third quarter, and I still have this. Okay? So every week I sell a covered call against it. All right? Now, every week sometimes I get 1%, sometimes I don't get 1%. But I will continually hold on to it until it hits my exit target. Which means, remember rule number 2, never sell at a loss. I have no intentions whatsoever of selling at a loss. But every week, I sell a covered call against my position to bring in cash flow. And every week, I bring in an average of 1%. So, go some more questions. Agree. All right, 86. Buffalo, New York. Nickname Mateo. I've been through Buffalo, New York. I didn't find it that exciting whatsoever. Jordan and Company. What expiration date do you buy? All right, Jordan and Company, I'm going to have to say this really quick. Number one, you're going to be very careful of the terminology in which you use. What expiration do I buy? I don't buy any expiration date whatsoever. What I do buy is I buy the stock, which is up here. Okay, this is the stock information up here. Down here, this is called the option chain. Okay, and I don't buy them, I sell them. So if I'm buying the stock at 268, I want to sell an option at 268 or whatever's closest. And then I want to collect the premium. Okay, and I always do it on a Monday. Okay, so tomorrow is Monday. I will buy a stock on Monday and I will sell 16 August 24. That is going to expire this coming Friday, and I'll be looking to capture 1%. So you're relatively new here because I've never seen that name pop up before, and I'm really good with names. So hypothetically speaking, if you jump in tomorrow night and you say, hey James, what positions did you get into this week? And then tomorrow night, I will let you know what positions I got into tomorrow morning. Because contrary to popular belief, I do not sit in front of my computer all that much and looking at stock information. I don't. Okay, when I say the 10-minute trader, okay, I turn on my computer. Now, I have a morning trading group, okay? So we get together every morning, Monday, Tuesday, Wednesday, Thursday at 9 a.m. And I stay on as long as you guys keep asking questions. So if you guys want to learn how to do this, fine. Join the morning trading group. It's $100 a month. You get a ton of information. You get to follow successful traders, and you get to join in the Discord group. But what are you going to get out of it? Well, you're going to get to watch exactly how I do my trade. Now, I have a podcast that I have been doing. Where is it? All the way up. Keep going, keep going, keep going. Podcast right here. Okay, now there's over 900 episodes. It'll pop up. There it is right there. Dividend Stock Talk Podcast. Okay, you can get it on Spotify. You can get it on podcast, or you can get it on Apple. Manage you, yeah, whatever. Okay, but there's over 900 episodes. Every single trading day, I actually do a live podcast, so my trades are actually live. So you can get to listen to all of them. See where I went wrong, see where I went right. Okay, I'm doing it basically, for future generations of my family, so they can say, hey, what did Dad do back then? This is what Dad's doing. Okay, so next, let's progress. What expiration date? All right, yeah, Jordan, I don't buy, I sell. Great, Jordan Company does weekly covered call. Yep, awesome. Oh, I missed some questions. Hey, James, what do you look at on the 90-day chart? Ooh, Felix, good question. Okay, Felix, are you ready? This right here is the 1-year chart. Let me move this over a little bit. Yeah, because people have asked this question before. What am I looking for on the charts? I'm looking for 5 things. 5. You ready? Here we go. 1, the high of the year, or the high of the chart, whatever the chart is. The high, the low, where was it? Where is it currently? And what direction is it going currently? Okay, the 1-year chart, down, up, down, up. She's in an upward trend at this moment according to the 1-year chart. Okay, every time you change a chart, everything changes. Okay, say I want to look at 4 charts. 4. First is the 1 year. Second is the 90-day. Now, 90 days from today would be 5/9, which would be May 9th. Right there. Okay, here's the 90-day. See, it's a total different picture. What am I looking for? High, low, where was it? Where is it? Which direction is it going? Okay, she dropped sideways, up. Okay, what else am I looking for? High, low, 1, 2.5 weeks. Low, high, 1, 2 weeks. High, low, 1, 2.5 weeks. Low, high, 1, 2 weeks. High, low, 1, 2.5 weeks. High, 1, 2. Low, 1, 2, I can't really count that as a half. But I'm looking for certain patterns. And there is kind of one here. Go up, down, up, down, up, down, up, down, up. Now it should be coming down. That's what I'm looking for in the 90-day chart. And then I go to the 30-day chart. Where are we? Right here. Okay? Same thing. High, low. Where was it? Where is it? What direction is it going? It's going towards the upside. See that? Okay. Your 30-day high is right here. That was 5 days ago. Let's look like it was a Monday. Yeah, Monday. 30-day bottom here on the 24th. 30-day bottom, 30-day top. Here we are right now. Hypothetically, she should be coming down. That's what I'm looking for. Fourth chart is the seasonality chart. This one's a cool one. This one is hidden away. Now, this is the seasonality chart. All the way over to your left, January 1st. All the way over to your right, December 31st. What does a stock normally do? Well, the blue line represents the movement for this year. It was up there, come on down. Here's where we are right here, where this blue dot is. Right? Middle of August. The red line represents 10 years of movement. That's 2014, 2015, 2016, 17, 18, 19, so on and so forth. 10 years average movement. January 1st to December 31st. Well, it's a no-brainer. If you're a really lazy trader, well, you buy it in January 1st, and then you sell it December 31st, and you make money. Well, what does the chart tell you? Average goes up. Okay? But what do I want to see? I want to see this area right here, because this is where we are right now. If I'm going to buy this stock, what does the stock normally do this time of year? This time of year, we happen to be in the, second, third week of August? Well, that's one thing a doctor doesn't want to see. Flat line, basically going nowhere. No big ups, no big downs over the last 10 years. Is this guaranteed? No, it's not guaranteed. It just shows you what it did last year, the year before, the year before, year before, on average. I like looking at it to see, does it normally trend to the upside? Does it trend to the downside? Or does it not do a darn thing? This thing doesn't do a darn thing this time of year. Not a problem jumping into it, in my humble opinion. So that's what I look for in the charts. So let's progress forward. Bamarock. If you do a covered call at less than what you pay for it, you can roll it out and up. Yep, you can. Holy cow, Hollywood! Nice to see you, dude. Haven't seen you in a while. Got 2% on my cash stuck in covered call for a month now. I don't know if that's good or bad. Got 2% of my cash stuck on a covered call. Oh, you only get 2% stuck? Well, you get the other 98%. Anyway. Nick Mateo. Kutchi. Is your exit price the original purchase price, or do you use the price you averaged down to? That's a good question. Usually, let's go what we're looking at, MCD. Let's look at Macy's. Now, how about AEO? Because I actually have some AEO, and I was just talking about it a little while ago. Now, remember, I bought AEO twice. April 1st, I bought it at right around 26. Okay, right now, it's at 21. I bought it at 26 back in April. Okay, way up here. Okay, it's all the way down here. Now, originally, my price is what, 27, 26. 25.90 something, close to 26. That's my original price. So my original exit price would be the exact same that I paid for it. But when I dollar cost average down, now my average price is 23. Okay, so I bought it at 26. It dropped, so I bought it down here. Okay? Now my average price is 23. So now my exit average price would be 23. That makes sense? I could, hypothetically, sell half of them at 22, make a profit, and wait for the other half to get up to 26 and sell them once it gets back to 26. But I have no desire to hold it until it gets back up to 26. I would prefer to sell them all when it hits 23. So I'll continue to dollar cost average if I can. I don't like to have too much money into one stock at a time, and I don't know how much I actually have. Hold on a second. AEO, I only have 36,000 into it. So I could dollar cost average a little bit more, but from 23, what I have it at, it's at 21.50. Dollar cost average, we'll just bring it to around 22. Not really worth putting more money into it, because I have been getting 1% every single week lately. All right? Except for last week. Last week I had to buy it back because hold on a second. Now we're going to go back all the way to April. Okay, we're going to get rid of this. Okay, these are all of my buys and sells on AEO since I first bought it. Now, anytime you see green is when I buy something, anytime you see red is when I sold something. So the very first week, I jumped in at $25.97 and I sold the 46s. That's 2%, close to it. The very next week, I sold the 34s, great. Week after that, I sold for 4 cents. Didn't make that much. Week after that, 7 cents. Week after that, 24, 23, 21, 14, 22, 15, 5, 4, 23, 16, 16, 6, 31, 20, 22, 28. That's what I've made off of AEO since I bought it. Okay, granted, it still hasn't hit my exit target. Okay, but I have no intention whatsoever on selling it at a loss. So I will continue holding on to it until it hits my target. King A, what stock should I buy? I can't answer that question for you, King A, because I know absolutely nothing about you. So if you want to send me your phone number, I'll give you a call. We'll chat. See if this is even right for you, because this might not be right for you. It's not right for everyone. Okay, what it doesn't do is not for cash accumulation. It doesn't go from here to here. So if you're looking to make a whole bunch of money in a short period of time, this ain't it. Okay? What is your typical asset allocation on portfolio? Ooh, asset allocation. Okay, account number 1, I usually have 4 to 5 positions. 5 positions. At 5 positions, it's 20%, 20%, 20%, 20%. If it's 4 positions, it's 25%, 25%. Now, if you think I have money just sitting around doing nothing, hell no. 98% of all my money is invested at all times. Why? Because if my money is sitting around, it's actually going backwards. If you take a look at the inflation nowadays, it's freaking crazy. Don't listen to what they say online, on TV. Go to online and talk to real people. Okay, what did you pay 4 or 5 years ago for groceries? Those exact same groceries, what are they costing you now? What did you pay for gas 4 or 5 years ago? What are you paying now? What did you pay for, you know what, never mind. It is what it is. All my money is invested at all times. I've been doing this long enough so that I know that I'm only buying good quality companies. That's it. If and when they go down, well, yeah, they still have weekly options available. So if I buy it here at 26 and now we're here at 19, well, I'm not going to be selling the 19s. I'm going to be selling the 22s, the 23s, still collecting something. Okay? Because I don't want my money just to sit and collect nothing. The value may go down. See, if I bought it at 26 and it's at 21 now, did I lose $5? No, I did not. I only lose $5 if I sell it for less than I paid for it. And that ain't happening. Okay? I bought it for 26. I'm not going to sell it until it goes back up to 26. But what I will do is I will sell a covered call at the 22s, the 22.50s, the 23s. And yeah, I'll collect 10 cents a share, 20 cents a share. Granted, it's not 1%, but it's enough that allows me to pay my bills. Yeah, maybe I might be able to scrimp a little bit, but I'm not losing anything. Okay? There's a huge difference. If the stock price I bought it at 26 and it's now at 19, on paper I lost money, but in reality I didn't lose anything. You do not lose until you sell for less than what you paid for it. Rule number one, never buy something you don't understand or you don't know, you don't want to hold. Always go into buying whatever you want to buy as if you're going to hold it for a long term. But make sure it's a good company. Make sure they have increased dividends. And once you buy it, rule number two, never sell for a loss. It defeats the purpose. Now, we were tinkering around with the idea, all right, if we buy it for 26, we sell it for 21, we collect a nice fat premium, because 21 is going for 56 cents, which is more than 2%. Great, let it go at 21. Monday, we'll buy it back at 21, and we'll get another 2%. And then we'll continue doing it until we recoup the amount of money from when we bought it at 26 to when we sell it at 21, because there would be a loss there. But if I'm continuing collecting 2% every week, yeah, I don't like that idea. I don't like the negatives on there. I just assume not sell it and sell at a lower strike price. Clutchy. A Cutchy? Is that right? Cutchy? Is your eggs? I already did that one. All right, King A, I can't tell you that. Okay, like I said, send me a number. I'll give you a call. Q. He buys stocks and sells option to hedge his port. I have no idea what port is other than, well, port could be port wine, or it could be a navigational port. Anyway, Chris needs money. Get to go. Ooh, I didn't get to read it. Uh-oh, I didn't get to read his thing. I wanted to look at it. What chart system are you using? That is Thinkorswim. I see, thanks. All right. You do options? Of course I do. Are you teach people? Yes, I do. Weeds on. All right. How SL and TP really work? I have no idea what you're talking about. Shammy, I see. Follow me, the live creator. Okay, thank you. Just one. Blah, blah, blah. Invited, blah, blah, blah. It's not me. It is Thinkorswim. Okay. So, you do keep selling the 23 calls. No. Okay, we're talking about AEO at the moment. Okay, my original price was 26. A dollar cost average down to 23. The 23s at this moment are going for 5 cents. Yeah, no. Okay, it depends on where the stock is. Right now it's at 21.20. So I'll probably do the 22.50s or the 22s. Not the 23s. The 23s are too far away. Not giving enough income. G. Preston, what happens if it tanks? Well, here's the thing. Rule number one, never buy something unless you want to hold it long term. If you buy it and it tanks, well, that's what it does. Stocks always go up and then they go down. And then they go up and then they go down. And then they go up. That's all they do. They go up, they go down, they go up, they go down. That's it. Unless, of course, every once in a while, a company will go bankrupt. Now, is AEO up for bankruptcy? Not that I've heard of. Questions. Any hot option picks tomorrow? Felix, James, how do you buy back your call on Thinkorswim? Oh, that's simple. Okay. On Thinkorswim, monitor position and activities. Okay, you ready? You click on the stock you're talking about, right click, see that open up, create closing order, all right, and here's my closing orders. I can sell the 35 covered calls. I could sell 3,500 shares at $20.95, or option 3, buy back the 35 AEO 116 options right there at 60-cent limit order. I pick that one, I click it right there, it fills, I hit confirm and send. It tells me the order right here, it tells me my break even, blah, 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 all that kind of nice, neat, fun stuff. Do I want to do that? No, I do. Not at the moment. But that's how you do it. Delete. Okay, that's how you do it. How are you earning 1 to 2% per week? G. Preston, 3 Trey. Okay, Preston. I'm just going to call you Preston for short. Hopefully that works. Okay, Preston, what I am doing is I'm picking a good quality company. That's number one. Okay, that is number one. Always pick a good quality company. Now, there's 9,598. We actually looked a little earlier. Okay, that's close to 9,600 companies you can choose any day of the week. How do you choose? It's a 50-50 shot. Number one, half the companies are going to be paying out a dividend. That is sharing the profits with you and me. We are the buyers, we are the sellers, we are the investors. We get half of those companies, 9,598 companies, half of those are going to pay a dividend, sharing the profits. The other half, they can take all the profits and invest back into the company for capital appreciation. So before you buy anything, you've got to decide, am I buying for cash flow? Am I buying for capital appreciation? If you're looking for capital appreciation, you're in the wrong place. Okay, that's not what I do here. I'm 60 years old, I'm retired. I do not want to put my money and have to wait for it to grow. I take my money every week, every Monday. I buy certain stocks and then I sell a covered call against them. A covered call is one of the safest trading strategies there is. You buy a stock, you own the stock. That is yours until you decide to buy it, until you decide to sell it. So if I buy AEO tomorrow morning, this is the current price, $21.56. If I like it, I will buy it at $21.56. Well, I already have 3,500 shares. I don't need any more, all right? But if that's what I was going to do, number one, is it a company that I like, I understand, and that I want to hold on to for a long period of time? That's question number one. Do I know what they do? Do I like them? Do I want to buy them? That is a very important question because you're talking about your money. Nobody has more interest in your money than you, except for maybe your ex-wife or your ex-husband or your kids. But you know what I mean. You work hard. This is the way it usually goes. Okay, you go to school, you go to college, you get a job, you work 30, 40, 50 years of your life, and you take a little bit of money every single week and you put it aside, you invest it for your retirement. Because whether you want to admit it or not, and whether you like it or not, retirement is going to come. We are the only species on this planet that have to pay to live here. So if I want to live a nice, comfortable lifestyle, I need to have an income. So I only invest in companies that share their profits. The simplest and easiest way to figure out if a company is profitable and consistently profitable, well, they will continue to increase their dividends. The dividends is the share of the profits which go to the investors. You can call it any other way. You can label it any way you want. You can call it whatever you like. Seriously, you can. But if a company is profitable, they're going to increase their dividends. Plain and simple. And if they're consistently profitable, they're going to increase their dividends every single year. Now, there's over 300 companies that I know of that have increased their dividends for more than 20 consecutive years and have weekly options. Why do I want weekly options? Well, I can buy this first thing tomorrow, I can sell this, and I can collect this much money this week. And then look, I can do it again next week. I can do it again the week after. I can do it the week after, the week after, the week after, the week after. 52 times a year. I can do this exact same company 52 times and collect something. Okay, I'm shooting for 1%. So if I buy it at $21.56, I sell the $21.50s, I'm collecting 37 cents. I lose 6 cents right off the top. You take that off, I'm walking away with 31 cents. 31 cents on a $21.50 stock, that's over 1%. You want to know how I get 1%? I pick a good company, I do a covered call. It's one of the safest trading strategies there are. If you don't know what a covered call is, you can ask someone. It's really simple. You buy a good stock, you sell someone the rights to buy it from you for basically the exact same price you paid for it, and you get to collect the premium. This is called a premium here. This is where if you're buying the premium, this is if you're selling it. Okay, if you're buying an option, you pay this price. If you're selling an option, you pay this price. I don't buy options, I sell them. I'm looking for cash flow, I'm not looking for capital appreciation. I want my money to give me a certain amount every single week. So retirement is coming whether you like it or not. Musa, sir, listen to the market or not. I have no idea what that means. Whatever, somebody over on YouTube asked me a question. All right, so Preston, hopefully that answered your question. Okay, there's 300 companies that I like that consistently increase their dividends every single year for 20 consecutive years. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. That's 5 lists. That's over 300 companies that you can choose from that will continually increase their dividends. Sir, Lockheed Martin. Ooh, LTM. Now, I do like Lockheed Martin. Let's take a quick gander at Lockheed Martin. LMT. Yeah, it's going to be a no. The only reason why Lockheed Martin is going to be a no because it's out of my price range. And it's at the high of the year. Okay, I personally, however much money you think I have, I don't. I cannot do 1,000 shares at $550. Sorry, I can't. I like to keep my purchases under 250. That's reason number 1. Reason number 2, it's at the high of the year. Okay, out too high for me. Okay, and it's at the high. Okay, normally 30-day high. Yeah, I'd wait for it to come back down to here to your 30-day bottom. 30-day bottom is 470. It's at 550. Yeah, it's an $80 increase. Okay, if you think, all right, honestly, think of this. Think if this was you. Think of this. If you bought it 30 days ago at 460, because 30 days ago, okay, it was at 460. Now it's at 550. That's an $80 increase. If you do not sell at an $80 increase, well, that's up to you. But you can have investors like me. Ooh, I'm taking that profit. Because it ain't a profit until you take it. It may look good on paper, but you cannot take that paper and say, hey, I just made $80 per share on my stock. Can we use that to pay my mortgage or my electric bill? No, you can't. You cannot use paper profits to pay any bills. That's why I want consistent cash flow. Okay, Dee. But no, I'm going to say buy and hold. What you are doing is like buying a farm and yelling at the crops to grow. I'm going to disagree with you there for a second. The only reason why I'm going to disagree with you is because I don't have to do jack squat nothing. I don't, seriously. If I buy Macy's at $15.58 where it is right now, and I sell the 15.50s, I collect a certain premium. I don't have to do anything. The stock doesn't have to do anything. The stock can say exactly where it is, and I'd still make a profit. I'm taking my money and I'm putting it someplace, and I'm getting a return for a 5-day time frame. I'm buying on a Monday. I would like to be out by Friday. Does that always happen? No. Every once in a while, I have to carry it longer. Perfect example, AEO. I've had it since April. Now, I do still collect money on it every single week, so I don't mind holding on to it. But no, for what you're saying, buy and hold, what you're doing is buying a farm and yelling for the crops to grow. Doesn't work that way, okay? Because the crops actually have to grow. And crops don't grow from Monday to Friday. Sir, why is technology sector down? I honestly don't. I don't categorize my stocks that way. I categorize my stocks this way right here. September, hold on. This is how I categorize my stocks. Calendar. That's it. This week here, well, here's my category. Abbott Labs, AbbVie, Hormel, PNC, Procter & Gamble. That's it. Do I honestly care that this is, what the hell does Procter & Gamble do? Consumer goods. PNC, banking. Hormel, consumer goods. Abbott Labs, is that biotech? AbbVie, I have no idea. I don't categorize them any other way than when are they paying their dividend. That's it. So Dee, I'm going to disagree with you. That's okay. Preston, good point. All righty. Double or triple, it's insane. I have no idea what you mean by that, but okay. Bic lighters are $4 now. I remember that. Bic lighter for $1.99 for thousands of sure firelights and a flame that adjusts to different heights. I remember that commercial. It was $1.99. Long time ago. Preston. Okay, thank you. Okay. Christopher Lee Cartel. Is that blood? I have no idea what he's talking about. What is the 5 things you're looking for? 5 things I'm looking for? Safe, predictable, consistent, risk-free. Risk-free would be under safe. Ooh, 5 things. A company that increases consistently their dividends, number 1. Weekly options, that's number 2. Safe, predictable, consistent. There you go, 5. Makes sense, there you go. Dee, you are losing if it rises above the call price. You're still underwater in that scenario. Dee, again, I'm going to disagree with you. Okay, I love having people I can disagree with. Okay, the reason being, here's the thing. Let's say, Dee, hypothetically speaking, I buy Macy's tomorrow morning at $15.58. Okay, we can agree on that. That's what the number is right there. Now let's say hypothetically, I sell someone, I really don't care who, the option to buy it from me for basically the exact same price I paid for it, which would be $15.50. For that privilege, yes, I will lose 8 cents right off the top. I'm okay with that. However, I am going to collect whatever this premium is going to be, and it's not listed on there for some strange reason. So let's see if we can find it. Options, here we go. That can't be right. All right, well, here, now I'm not sure if this is right or not, but on Yahoo Finance, they say the $15.50 call option is going for 44 cents. Okay, correct me if I'm wrong. Okay, if I buy it at $15.58, sell it for $15.50, the last price was 44 cents. That's over 2%. Okay, so let's go back to your scenario. So we're agreeing if I buy it current price, sell it here, collect the premium, whatever the premium is. Yahoo Finance said it was 44 cents. 44 cents on $15.50 is more than 2%. Okay, agree? Agree, great. Now, let's say in your scenario, let's say the stock goes from $15.50 and it goes up to 18 bucks. Well, whoever bought that option from me, well, they're happy as a clam. What you're saying is I'm losing money, and I'm not quite understanding how I'm possibly losing money when my only goal, I can honestly care less, and I don't know if you can understand this, so I'll say it a little slower. I could honestly care less if the stock goes from $15.58 to 16, 17, 18, 20. I don't really care. That's not what I'm looking for. I'm looking to collect the premium, and the premium on Macy's at this moment is 2%. If I'm collecting my 2% for next week, I'm not losing money. I really don't care that the stock price went up. I don't care if the stock price goes down. I'm looking for safe, predictable, consistent 1% per week. And I just did the exercise, and the $15.58, the 15.50s is going for 44 cents. 44 cents is more than 2%. If it goes up, I honestly don't care. I will be cashed out. Somebody else will own that stock. I will still get to keep my 44 cents a share, and that's the only thing I'm looking for. I'm not looking for capital appreciation. You weren't paying attention to that. I only care about safe, predictable, consistent 1% per week. If I get it from the dividend, fine. If I get it from capital appreciation, fine. If I get it from the premium, fine. I honestly don't care. The company's been in business for over 100 years. The numbers are here. If you have a difficult time comprehending the numbers, I can't help you out with that. I only know the simple math. This is what I'm buying it for. I'm selling a covered call here. Means I'm giving someone else the privilege of buying it from me at this price before this date, 16 August, which is this Friday. If the stock goes up, great. They will buy it from me. They will be happy. I'm already happy because I got the premium. The premium from what Yahoo Finance says is 44 cents, which is over 2%. I get no problem with that whatsoever. Well, I do have a challenge with people who don't understand simple math. Michael Welch, please explain what a covered call is. I hear so much about them. Michael, I'm going to give you a brief explanation, but here's the thing. Best thing you could do is go over to YouTube, put in what is a covered call, and it'll give you the explanation. But let me see if I can simplify it for you. Take Macy's, for instance. In order to do a covered call, you have to buy and own the stock first. Now, 100 shares of stock is equal to one option contract. So 100 shares, one contract. 500 shares, 5 contracts, so on and so forth. So at first, I got to buy the stock. I need to own the stock before I can sell the rights or the covered call for someone else to buy it from me at a certain price by a certain time. The example that we're using right here, Macy's is currently at $15.58. See it? If I'm buying it at $15.58 and I'm selling somebody the rights, not the obligation, that means they can if they want to, they don't have to if they don't want to. All right? If it goes up, they have the opportunity to buy it from me at $15.50. So, like I said earlier, $15.50, if she jumps up to $18, whoever bought that option for me and paid me that 44 cents, they have the right to buy it from me at $15.50. Do I care? No, I don't. Because I'm looking for the premium and only the premium. And the premium at this moment, according to Yahoo Finance, is 44 cents. 44 cents on a $15 stock, well, that's close to 3%, but it is over 2%. And I'm okay with getting 2% per week because 2% per week is over 100% per year amortized out. But I don't want to boggle down with the numbers or anything, but I like 1% per week. What do I think of Intel? Wilma, we already did Intel earlier today. Julie C., what is the third account? Well, the third account, the third account is different option trading strategies. Okay, it's not just covered call. First two account is covered calls only, the trading strategy I'm showing you right here. The third account is more for the advanced traders, so I'm not really going to go over that here. Okay, Julie, I'm pretty sure you're in the morning trading group, aren't you? So you should have access to that kind of information. Drazik is here. Drazik, you show up just before I sign off every day. You know, it's 11:26. I'm signing off in like 4 minutes. Hey, we're over 200 people. Maybe I'll go a little bit longer. Uh-oh. Let me go back a little bit. Sage, not sure. Okay. What is the best dividend stock? I don't think there's really a best dividend stock. How do premiums work? Pervy, interesting question. All right, where did I miss off? All right. Would you do covered calls with Tesla, or is it too risky for your strategy? Boomer Boy. Yeah, I don't like Tesla. Don't get me wrong. It's a great company. He's got great philosophies, and he's got great technology. However, what he doesn't have is the desire to share profits. Tesla doesn't give out dividends. So that's a no. If he doesn't have a dividend and it doesn't consistently increase, I have no desire to look at it. It may be a great company, but how do I profit from it on a weekly basis? Yeah, I could do covered calls on it, but what happens when when the stock price goes down? And don't think that stock prices don't go down. Hold on, TSLA. Okay? Take a look. She went up, she went down. She went up, she went down. She went up, she went down. Up, down, up, down, up, down, up, down. What happens when the stocks go down? What do you collect? Absolutely nothing, because he does not share his profits. So how do I know if he's consistently profitable? Well, then I have to waste my time and look through all the what do you call it? Quarterly reports, earnings, and all that crap. Yeah, I have no desire to do that, because there's over 300 companies I already know for a fact that have increased their dividends every single year, year after year after year. Those are the only ones I'm interested in. Tesla, no thanks. Sorry. There are certain companies I just don't want to waste my time looking at, because they do not fit my parameters. So let me see if I can make it simpler for you. Okay? Now, I have no idea who you are, what your age is, but I grew up in the 60s, 70s, and 80s. If it ain't broke, don't fix it. Okay? I'm consistently getting 1% doing what I'm doing. I am okay with that. If I wanted to make more money, I would sit in front of the computer longer to make more money. But there comes to a point in your life, and everyone's going to get there, where money is no longer the driving factor, where you prefer to spend time with your kids, with your grandkids, watching the grass grow, going to the seaside and just watching the waves tumble in over and over and over, bird watching, watching plants grow. There comes a point in everyone's life where it's like, you know what? I don't want to deal with this anymore. I got a simple, safe, predictable, consistent 1% coming in. That 1% pays my bills. I do not need the aggravation of working. I do not need the aggravation of sitting in front of the computer. Simple, easy, predictable works for me. You guys are all different. There's 277 people here, okay? You guys are all different. Everyone has a different dream, a different idea, a different goal, a different risk factor. How you want to spend your time. I wake up in the morning, I do whatever I do. I sit in front of my computer, I talk to the people that are in the morning trading group, and we look for certain things on a weekly basis, every single week. Manny, so if there's grass on the field by a... All right, Manny. There's always a wise ass in every crowd. And we know it's Manny. Way to go, Manny. Paying loans. Yeah, I love paying loans. Okay? Amy, I love paying loans. I will borrow as much money as somebody is stupid enough to lend me. Because if I can make 50% per year, I will pay as high as 18 to 20% to borrow money. I will. Because I know I can make 50% a year. Okay? All right, CSX. I have no idea what CSX is. Should I keep Walgreens? Well, we haven't looked at Walgreens lately, so let's take a look at Walgreens. But let's take a look at CSX first. CSX. What the heck is CSX Corp? Okay, never heard of them, so let's take a look at Yahoo Finance to find out why I've never heard of them. CSX. Historical data, because I'm kind of curious what kind of dividends they have been paying. Dividends only. Maximum amount of dividends. Okay. 20, 20, 18, 17, 16, 15, 14, 13. Yeah. Wow. All right. I'm going to say no to this one. But look, they've been paying dividends since 1981. But let me read it to you, okay? February 17th, 1981, dividend, 1 cent. 82, 1 cent. 83, 1 cent. 84, 1 cent. 85, 1 cent. 86, 1 cent. 87, 1 cent. 88, 1 cent. 89, 1 cent. 90, 1 cent. 91, 1 cent. 92, 1 cent. 93, 1 cent. 94, 95, 96, 97, 1 cent. So what is that, the first 10, 20 years, they're only paying 1 cent per dividend? Okay, so 1998, 2 cents. Oh, 2001, it goes from 2 cents back down to 1 cent. And then it goes all the way up to 2007, then it goes up to 2 cents again. Then the 3, then the 4, then the 5, then the 6, 7, 8, 9, 10, 11. Yeah, I'm going to say no. Think about it. Yeah, they've been paying dividends since the 80s. But the first 20 years, it's just 1 cent. No increase whatsoever. So you're giving money to a company that's not they're not doing any better this year than they did last year. And they're not doing any better than they did 2 years ago. Then they're not doing any better than they were 3 years ago. Like, no, I'm terribly sorry. There may be some very nice people working there. I'm glad you're learning there, Manny. All right, user, what's his name? Wants to take a look at WBA. All right, WBA is going to be the last one. Walgreens. WBA. Okay, now you're asking whether or not you should keep it. I honestly can't tell you that because I have no idea what you bought it for. I have no idea what your plan is. I have no idea why you bought it. And there's a lot of unanswered questions. I can't give you answers to questions. I have no idea, okay? But let's take a look at Walgreens because I happen to own Walgreens. I have Walgreens in many different accounts. Okay, at this moment in time, first thing I always want to see. High, low, where was it, where is it, where's it going? Okay, 5 things. I can buy it tomorrow morning at $10.71. $10.71. Well, great, the 10.70, closest one's going to be the 10.50, 35 cents. I'll be losing 21, is that correct? 71, yeah, I'll lose 21, take 21 off of this. I'm making 14 cents, that's over 1%. The 11s, that's over 1% also. So you're making your 1% on Walgreens. So this is something a little bit in the news about Walgreens. Okay, number one, this bottom here. It's not the bottom for the year, it's the bottom for the last 7 years. Walgreens hasn't been this low in over a decade, or close to a decade. Here's the last 30 days. What does that tell you? 30 days ago, we're at 11.40. She shoots up, drops down. Shoots up, there's our high, $12.30. Well, now it's down to $10.68. Okay? It's down $2. Well, $2 on a $12 stock, that's over 10%. Okay? So, here's the things about Walgreens. Number one, it's over 100 years old. They have over 8,700 stores worldwide. Yep, they are cutting out 25% of them. They want to get rid of the dead weight. Why? Well, because of governments don't want to charge people for petty crimes. You can legally go into a store, steal $900 or less, walk out, and they will not prosecute you. So, what do you think is going to happen? There are going to be a sector of the population that goes into stores, takes some shit, walks on out, and they're not prosecuted. Well, stores like Walgreens are losing money left and right. So what are they going to do? They're going to cut out those stores, get rid of the dead weight, and stick with only good quality stores that are actually turning a profit. Makes total sense. It's going to take a while for them to cut those 25%. So yeah, she's at an all-time low, well, not an all-time low, but for the last 5 or 10 years, this is a low. And you ain't going to get money by buying high and wait for it to go higher. You're going to make money by buying low and selling higher. Yeah, they're going to be stuck here a little bit. They're going to go up, they're going to go down, up and down, up and down. But eventually, once they get rid of that dead weight, the 25% of the stores that are losing money, and then they get back to business as usual. Well, where are we going to get our prescription drugs? Okay, you may not realize this or you may not think this, but I'm from the Generation X. I'm 60 years old. Okay, all the people I went to school with are all thinking about retiring. What do you do when you retire? Well, you sit on the porch and you suck down all your prescription drugs. Okay, where are you going to get your prescription drugs? Walmart, CVS, Walgreens. Okay, people actually like to walk in and talk to their pharmacist. Where are the pharmacists? CVS, Walgreens, Walmart. Okay? So, whether or not you like Walgreens or not, take a look at the numbers. 1071, the 1050s, making 35 cents. That's well over 1%. Great, I'm making my 1% on Walgreens. I have no intention whatsoever for selling it less than what I paid for it. As long as it's going to pay me every single week, well, I will continue on buying it. So, JB's. So, do you buy stocks right before the dividend is paid out and sell it through the covered call? Basically, yeah. That's basically what I do. Because before the dividend, stocks have a tendency to go up in value. What else would you want to buy it? Okay, can you count on a chart anytime during the year? No, stocks move for two reasons and two reasons only. Okay, don't kid yourself. A known reason or an unknown reason. What's an unknown reason? An unknown reason is something you hear about in the news. Earthquake, hurricane, force of nature, lawsuit, someone got caught with their pants down doing something they weren't supposed to, and now it's a big, huge mess. Yeah, crap like that. Something you cannot plan. You can't plan for stuff like that. Exxon Valdez crashed in the Northwest. Okay. British Petroleum sprung a leak in the Gulf of Mexico. Apple got sued, a huge lawsuit over in Europe, and they had to dish out a huge chunk of money. 3M had a lawsuit, and they just dropped off of the Dividend Kings list after 67 years of increased dividends. The CEO decreased the dividends on 3M. Anyway, certain things happen you cannot plan, but affects the stock. Now, what are known reasons? A known reason is something you know about and you can plan for. Well, what is that? Well, that is, let me get rid of this. That is something like dividends. Let's get rid of that. Earnings, okay? There's no conference calls. Nope, no stock splits, no economic events, no future liquidations, market drive, ETF dividend. Nope, none of that crap. Okay, so certain things you can plan for. Earnings, dividends, seasonality. What do I mean by seasonality? What I mean by seasonality, winter, spring, summer, fall. Certain stocks react differently during the times of the year. In January, why do you think Weight Watchers goes up? I mean, come on, think about it. Weight Watchers stocks goes up at the beginning of the year because a lot of people are doing diets, a lot of people are doing whatever. Hershey stocks goes up the first week of February. Why? Well, you got Valentine's Day on the 14th. What comes after Valentine's Day? Easter, the two biggest chocolate days of the year, Easter and Valentine's Day. Well, the stock goes up. Okay, why do gas stocks go up in what do you call it? Was it June, July? Right when kids get out of school. That's when most people take their vacations and they drive around. Gas prices go up. Why do oil prices go up in March? Think about it. Because you can buy oil anytime from January to December, but why does it go up in March? Well, here's the thing. Let's say hypothetically you buy your oil in January, I buy my oil in June, and someone else buys their oil in July or August. Well, what happens in October, November? It starts to get cold. Now, we can buy our oil at any time we want, but what happens come November? Come November, we all switch on those oil heaters. Well, those oil heaters are sucking up oil. Okay, so what happens in what happens in February, March? Your oil tank gets down and you got to start buying oil again. Now, we can buy oil at any time, but we all turn on our oil burning furnaces at the same time. November, December, January, February. And what happens in March? Well, we're low, we have to refill. Got no choice in the matter because you have your oil on, your heater on October, well, November, December, January, February. March, you're starting to run dry. You got to refill. So you refill in March. That's why oil prices go up. Well, heating oil, anyway. All right, which platform is that on your TV? This is Thinkorswim. Now, Thinkorswim was created by a professional trader 20, 30 years ago. I've been using it for the last 20 years. Now, the professional trader sold it to TD Ameritrade. TD Ameritrade got bought out by Charles Schwab just recently. So now, even though I still use this trading platform, I'm trading through Charles Schwab now. Railroad, I have no idea what that means. 86, CSX is a railroad company. Alrighty. 86. Nope, 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 nope. What about AT&T or Verizon? Now, we did this last night with AT and Verizon, and we got plenty of people here tonight, so let's do it again. AT&T, there we go. First thing I always want to see, high, low, where was it, where is it, what direction it's going. It's going to be a no for this week. Only for this week. And the reason why it's a no for this week is it's at its high. I do not buy at the high and wait for it to go higher. You're going into territory where it's never been before. If it was worth 22, 23, it would already be there. Right now it's at 20 and it's going up. Is it continuing to go up? Don't know. Okay, I don't like buying at a high. Where would I like to buy it? Look, it goes up, it comes down. It goes up, down, up, down, up, down, up, down. I want to buy it when it's here, getting ready to turn around and go back up. Then it goes back up, it comes down. I want to buy it here. Then it goes up, and it comes back down. I want to buy it here. I don't want to buy it as, I want to buy it when it's at the bottom, turning around and going back up. Let's zoom in a little bit and see if you can see what I'm talking about. Okay, take a close look. She goes up, great, profit taking. Now she's down, here's the bottom. 2 days to the upside, I jump back in and she goes back up again. She comes back down, 2 days up, I jump in and goes back up again. Okay, I like jumping in after this profit taking because you're going to see a stock go from 16 to 17. That's not a big, huge price, but from 16 to 17, that's $1. $1 on a $17 stock is a little bit more than 50, well, a little bit more than 5%. Okay, I'll take a 5% profit. Okay, Verizon, VZ. Okay, now Verizon, first thing I want to see, where's the high, where's the low, where was it, where is it, what direction is it going? It seems to be channeling. Most people would call that sideways. I hate saying sideways because it doesn't go sideways. It goes up, it goes down, it goes up, it goes down. That's all it does. All right, numbers. What am I paying for it? $40.78. Well, the 40.78, closest one is going to be the 41. The 41 is going for 25 cents. That's not 1%. I like Verizon, don't get me wrong, I do. But not for this week, because the numbers don't work. There are too many other companies that are paying 1% or more. Why would I want to jump into Verizon if it's not giving me 1%? I could do Macy's, I could do Kohl's, I could do Ford, I could do General Motors. There are a lot of companies that actually are paying 1%. This one is not. John, Energy Transfer. Energy Transfer. First thing I want to see. High, low, was, is, direction. That was quick. High, low, was, is, direction. Okay. Now, what am I buying? 15.71. Closest is going to be 16. 16 is 5 cents. Nope. Next. It's actually that easy. Nope. Next. I like Energy Transfer. I just don't like it this week. Sorry. And it's always the answer when selling. Not yet is always the answer when selling. Yeah. AT&T data breach will affect their stock. Your thoughts? All right, I just looked at AT&T, and AT&T is a no for this week. Nasty Nate, possibly is always the better answer to any investor. Possibly. Not quite sure what you mean, but okay. Walgreens is taking a beating on earnings right now. When do you think they will become profitable? Sage, that's a good question. Now, I gave a big, huge explanation on Walgreens a little earlier. Okay, Walgreens has been in business for over 100 years. Okay, they 8,700 stores. They're cutting out 25 because 25, not 25, 25%, because they're having issues with theft. Because the current administration does not want to prosecute criminals. Mosquito in my broadcasting room. Imagine that. Okay, so they don't want to prosecute. So people can legally go into a store, steal a bunch of crap, walk away, and not get prosecuted. Yeah, it's going to come to a head eventually. You know, something's going to happen. So right, they say we're going to cut off 25%. And that way we'll get rid of the bleeders, and then we'll just have whatever we have left. They've been around for over 100 years. They're not really going anywhere, as far as I can see. I mean, you can go bankrupt with 2 or 3, 4 stores. Yeah, that's understandable. But when you have 8,700, that's a huge number. Boomer Boy, it can take the risk. I can take the risk, no problem. Just want to get into stock and lose all my money. Victor, Boomer Boy, I can take a risk, no problem. Just want to get into a stock and lose all my money. Okay, why would you want to get into stock and lose all your money? What app can I find this stock and invest? Okay, greatest dude, I have no idea what you're talking about. What app? I don't. All right, I don't like computers. I don't trust them. I write. You see my book? I write everything down. Okay, like all the stocks you guys had me take a look at since January, thousands upon thousands. Yeah, I write it down. I don't use an app, but what I can tell you is the stocks that I look at, the Dividend Kings, 50 years of increased dividends. Dividend Aristocrats, Dividend Champions, both of those have 25 years of increased dividends. Dividend Contenders, 10 to 24 years of increased dividends. And then you have Warren Buffett's list. Those 5 lists I just gave you have over 300 companies that have consistently increased their dividends every single year for more than 2 decades. Those are the only companies I look at. I honestly really don't care about this, buying at 12.50, going up to 16, 18, 20, 30. I don't care about capital appreciation. I care about cash flow. That's it. I'm not looking for companies that do not share their profits, because if they do not share their profits, then you're looking for cash accumulation, which means you put it here and you got to wait for it to move up. Sorry, I'm at the point in my life where I don't want to wait. Okay, and there should be no reason I have to wait, because I got 300 companies that are giving me what I want, 1% per week, safe, predictable, and consistent. Okay, we are at 11:50, almost to midnight. Wow, 270, cool beans. What else do we got? When selling, it's never the right or wrong time. Buy my book. Nasty Nate. Well, Nasty Nate, I'm going to disagree with you when selling, okay? All right, because there's always a right time and a wrong time. All right, so I do not sell at a loss. 1%, what's that? Oh, low. Did you really ask me what 1% is? All right, where's that question? Okay, Joe. Joe, what 1%? Question mark. What's that? Let me think. How do I answer this question without sounding like a dick? There isn't. 1%. Okay, $100. 1% of $100 is $1. 1% of $1 is 1 penny. 1% of $100,000 is $1,000. 1% of $500,000 is $5,000. Okay? 1% is 1%. Okay? If you want to make it easier, okay, take a look at this. The stock price, $15.71. Take the decimal point, 15.71. Okay? You take the decimal point, move it over 2 places. 0.15. 15 cents is 1% of $15. That's what 1% is. Sorry if I sound like a dick, but it's let me know your opinion on Altria. Ooh, we're going to have to do that one for tomorrow night. Holy cow, 330 people. Altria, M-O. First thing I want to see is the chart. High, low, where was it, where is it, what direction is it going? It's going to the upside, see it? It's plain to see. I can get a third grader. Say, look, it went sideways, now it's going up. Okay? High, low, where was it, where is it, and where is it going? Simple, and that takes less than 2 seconds. High, low, was, is, blah, blah, blah. Next, I want to take a look at the price. At this moment in time, $50.50 for Altria. The $50 strike price is going for 65. Okay, not going to work because you're losing 50 cents right at the top. Okay, so $50.50, the $50 is going for 65, means I'm walking away with 15 cents. No. The 51, 18 cents. No. Sorry. In my humble opinion, for me, Altria is a no. And I haven't even got to the chart yet. Look where the chart is. Okay, the 30-day high was just a couple of days ago. All right, 30-day high, bottomed out, now she's up too close to the 30-day high. I like Altria, don't get me wrong, I do, but not this week. The numbers don't work, and it's the wrong price. I have Dingleberry. I need to, oh my God. Alrighty. When buying, never follow the trend. All right, Nasty Nate, thank you for that. Depends on your capital and how fast you want money and how educated you are. Well, Boomer Boy, cool. Jim Bob, thought on petrodollar agreement ending with Saudi Arabia and how it will the energy sector. Jim Bob, interesting question. Number one, they got rid of the petrodollar months ago. And yeah, it is going to affect basically everything that we know of. Okay, the powers that be are suppressing information from us that they don't want us to know. But I don't want to get into politics. Now, you're asking me, how does it affect the energy sector? From that question, I'm making the assumption that you think I separate my stocks into sectors. I don't. I take all my stocks and I put them into the calendar. The calendar tells me when to look at a certain company. Okay? AbbVie, Abbott Labs, Hormel, PNC, Procter & Gamble are all for this week. Procter & Gamble, consumer goods. PNC, banking. Hormel, consumer goods. Abbott Labs, what is that? Microbiology, whatever they call it. And then AbbVie, I have no idea what they do. I honestly really don't separate my stocks by sectors. I really don't. Okay? So I will take a look at when are they paying out their dividend, and I will go from there. Wildcat Sam, hey James and everyone here over here on YouTube. Way to go. All right, so let's go for more questions. What about Costco? Isn't that COST? I think that's out of my price range. COST. Yep, it is. $854.93. Okay. 856. The 855s are going for 1090. Clear that. 1090 divided by 856 comes to a grand total of 1.23%. Okay, if you like Costco. Okay, now I don't do anything over $250 because I don't have as much money as you think I do. But I keep all my stock purchases under $250 per share. 856, the 855s are going for that. That's what you can get for it if you like Costco. I'm not going to go too much into it. Okay. Let's go a couple more questions, then we'll call it a day. Clint Carter, do you ever keep dividend stocks for long term or you just sell after you receive the dividend? All right, Clint Carter, I'm not really looking to capture the dividend. What I'm looking to capture is the premium, because more often than not, the premium is higher than the dividend. Now, it took me a while to figure that out, because I used to do dividend capturing, where I'd buy the stock and I'd capture the dividend. Okay? So I'd buy the stock and I capture the dividend. That was years ago. But when I found out that weekly options, that the premium, see, if I buy it at a certain price, sell it at a certain price, I collect the premium. The premium is usually higher than the dividend. So why would I want to collect the dividend if I can collect the premium and the premium is higher? And if it doesn't hit my target price, guess what? I get the premium and then I get the dividend. Okay? So I buy the stock, sell an option against it, I collect that premium. If it doesn't hit my target, I do it again. If it doesn't hit my target, well, I collect the dividend. Premium, dividends. That works for me. Do you think like, if you're thinking like 401k side, I am a fan of the dividend and covered call method as passive income. Cool. What's the deal with Nike? Okay, we can look at Nike tomorrow. Okay, it is almost midnight. I've been on since 9. Okay, my throat's getting a little sore, and I'm not used to talking so much. Couple thousand in capital, I'm okay with and understand if money won't be fast. Okay, Victor. If you know what you're doing, though, option trading can change your life like no other. You're absolutely correct. I'm going to agree with you. Jimba, thought on petrodollar. Thought on petrodollar ending with Saudi Arabia. Okay, yeah, I already talked about that one. How about O? I like real. Oh my goodness, Mike, don't get me started on O. Chucky, no, we're not going to do Chucky either. What do you think about TSLA covered calls? Yeah, no. Okay, Tesla doesn't share their dividends. Tesla doesn't have dividends. Okay, so if they're not sharing their profits, how am I going to know they're profitable? It means I have to go in and read all the quarterly reports every quarter. Yeah, no, thank you. Okay, it's simple, it's easy. If they increase their dividends, that means they're continuously profitable. Can we look at how much money we would make for selling? What do you think about RIO? TINTO? Yeah, no. Thoughts on Costco? We already did that one. Rio Tinto? Yeah, no. Ford pays great dividends and regularly. Joe, you're absolutely correct. And we already looked at Ford earlier today. It is midnight. I turn into a pumpkin. You guys have a great day. 3 hours of me yakking and nobody talking back. Why do the dividends matter if you're just collecting the premium and covered calls? Tesla. Oh my goodness. Boomer boy, really? Have a good night, James. Appreciate your expertise. All right, you're welcome, David. Okay, so why don't I like companies that pay dividends? Let me ask you a question. When, let me pull up Tesla. TSLA. Okay, so that way I'm not just giving you pie in the sky crap. Okay, here's the chart for Tesla. Okay, she went up, she went down, she went up, she went down, she went up, she went down, up, down. So the high of the year was 280. The bottom of the year is 140. That is a 50% drop in the year. Great. How much money did you make when the stock at 280 went down to 140? You don't make anything because they don't have any dividends for you to collect. Now, granted, it went from 140 back up to 270. Great, almost 100% increase. Whoopie deal. Okay? But they still don't share their profits. It's actually a simple strategy. And adults, see, my 9-year-old daughter got it. 9 years old. Simple, easy. How do you do taxes? Oh, wow. Okay, taxes is a total separate question. Total different answer. You really need to talk to a tax strategist before you even... If you're worried about taxes, it's kind of like the guy who goes to the Rolls Royce deal and say, hey, what kind of gas mileage does this thing get? If you have to ask, you can't afford it. If you're worried about taxes, you're doing something wrong. Okay? It is your legal right to pay little to no taxes as legally possible. If you're paying taxes, you're doing something wrong. All right? So back to you, Boomer Boy. If dividends matter, dividends don't matter. I didn't say dividends don't matter, okay, if I'm just collecting the premium. And you're right, you could do premiums with Tesla. Because look at it, it's at $200. At $200, you're bringing in $5.60 per share. Okay, for one contract, that's $500. Okay, great. Sounds lovely. But I have no desire to buy companies that do not have dividends. Because when they go down, it's not an if, okay? From 280 down to 140, that is a 50% decrease. What did you make when it went down? You made absolutely nothing. Okay? I like companies that pay dividends because absolute worst case scenario, I'm getting higher and higher and higher dividends every single year. That is the reason why I buy dividend stocks only and consistently increasing dividend stocks. Because I know next year, if I have to hold it, I'll get higher and higher dividends. Okay. 24 more questions. Come on, guys. I'm going to turn into a pumpkin. All right. Sage, thank you. Should I reinvest my dividends yield back into the stocks? Jim Bob, I honestly couldn't tell you that one. Okay, you really want to talk, send me your phone number. I'll give you a call. We'll chat. It's not me. Can you answer this, please? Do you sell on EX date? No. That was quick. Jose Manuel, today, plus 2,000. I have no idea what that means. Rude Dude Invest. Great info on strategy. All right, glad you like it. Nicholas Mateo. Do you use candles to determine buy-in timing? No. Thanks for sharing. Like David Robinson. It's not me selling blah, blah, blah. Hey, sir, yep. How do you start an OnlyFans? Evelyn, hi, is the stock going down tomorrow? Well, Evelyn, I can almost guarantee with 100% certainty that's a yes. Everything goes down. Everything goes up. Okay? I can't think of a single day where a stock didn't do anything. Opens in the morning, 50-50 shot. It's going to go up, it's going to go down. I'm following. Hey, John, cool beans. Uh-oh, I missed some questions. When Trump gets in office, Tesla will fall, right? Can't answer that question. All right, Evelyn, you asked a question. Hi, is the stock going down tomorrow? I said yes. I have no idea which stock you're talking about, but I bet you there's one or two that are going to go down. Okay, Evelyn, I gave you the answer that the question you just gave me. It's not me. So you hold through the dividend payout. No, not necessarily so. Dividend payout reduces the stock price. You're absolutely correct. Okay? But here's the thing. I buy 2 weeks before the dividend. Let me bring up my calendar first. All right. You see this right here? This is Lowe's. Okay, July 24, Lowe's on the 24th. That's when they're having their dividend. Their dividend is a grand total of $1.15. If it is here, I want to buy it 2 weeks before the dividend. 1, 2, on a Monday, the 8th. Okay, so on the 8th, I want to buy Lowe's. I want to buy it at the money, and I want to sell at the money covered call. Okay? So, if I buy it Monday, and I collect my 1%, I am either going to be in the money or out of the money at the end of the week. Let's say, hypothetically speaking, it doesn't hit my target. Great. Well, I got my 1% for this week. Wonderful. Now we're back here on Monday the 15th, and we're doing the exact same thing over again. I'm selling a covered call against the position. So I got a premium here, a premium here. If I hit my target, great. I'm out and I'm back into cash. If I don't hit my target, I keep the stock. 1%, 2%, week 3. Okay, I collect another premium. Okay, I collect a dividend. If I hit my target, great, I'm back into cash. If I don't, I do it again. But let's say, hypothetically, 1%, 2%, 3%, plus the dividend. Premium, 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 dividend. If I hit my target, great. If I don't, I collect another premium. If I hit my target, yes or no, then I'll do it again. So on and so forth. Number 1, I like Lowe's. Lowe's is a dividend king. They've been in business for over 100 years. They've consistently increased their dividends for 5 decades. Okay, what makes me think Lowe's is going to increase their dividend again next year. Well, they've been doing it for the past 50 years. Usually, if the sun rises in the east, sets in the west for 50 years in a row, more than likely it's going to do the exact same thing again. If Lowe's has increased its dividends every single year for 50 years, that's 5 decades, most likely they're going to do it again. But seriously, the 24th, 2 weeks before, on a Monday, at the market price, first thing in the morning, sell the covered call. Great, I get my 1%. I either in the money or out of the money. I'm either back into cash or doing it again. Okay? Back into cash or doing it again. Back into cash or doing it again. Over and over and over again. It's monotonous. It's boring as hell. It's the same stocks every 90 days. Okay? July 2024, Lowe's. 90 days, it's going to pop up again. 90 days, it's going to pop up again. It's been doing the exact same thing for 5 decades. Okay? Regardless of what happens to the stock price, if I own the stock, I get the dividend. All right. I'm tired. I'm done. You guys have a great day. 10 more questions. Let's go really quick. Evelyn, thanks. Jim Bob, you're welcome. Good night, good night, good night. Will the S&P, I don't do the S&P. We are heading for a recession. Evelyn, no, we're not. Sage, cool beans. Is an 8% yearly dividend good? No. It's not me. So why are you continuing after the dividend? Okay. If I back test a strategy and it performs well, what can I do? All right. Well, back testing is always a great idea. I always tell people before you invest any real hard cash, do a paper trading account, a virtual account. There's a lot of them out there. Okay, you can go to Google. How can I paper trade in the stock market? There's a whole bunch of places you can actually, buy 1,000 shares of Lowe's using monopoly money, and see how it works out before you put real cash into it. Why are you continuing to buy covered calls after the dividend payout? I thought you were waiting for, yeah. Okay. It's not me. Okay. Well, I'm not quite sure how to answer this question other than if I like the company, I'm buying it. Great. All right. 2 weeks before, at the money, sell a covered call. If I make it, great. If I don't, I do it again. If I make it, great. If I don't, I do it again. If I make it, great. I do it again. If I don't make it, great. Do it again. You keep doing it until it hits your stock price. That's it. Okay? I like Lowe's. I have no problem holding on to Lowe's. I can do a covered call on Lowe's every single week of the year. Good night, sweetheart. Well, it's time to go. All right, what do you think about Charles Schwab at the moment? But isn't the idea you are doing the stock that is paying a dividend? Okay, I'm not quite sure what you're meaning by that. Do you send out buy options? I have no idea what you mean by that. Why not move on to the next stock? Because you can't move on to the next stock until you hit your target price. Okay, so if I buy it at $100 and I sell it at the $100 call, if it's at $99.99 on Friday, I'm not going to sell it. I'm going to keep it. Now, on Monday, it's $99.99. Well, I send the $100 call. Okay? Here, no, what if it's at $99.98? Well, I still own it. Okay? I go here. Now, what if it's at $99.97? Well, I collect premium dividend, and I will keep holding on to it until it goes over 100. If I bought it at 100 and I'm trying to get 100 for it, that's what happens. All right. I'm done. Evelyn, yes, I do coach or mentor. I have a morning trading group you might be interested in. To find that, you go to the 10-Minute Trader. Where is it? Right here. All right. The 10-Minute Trader right there. Okay? The10minutetrader.com. Do some research on this. I've actually owned this for over 20 years. Okay, you see? Thanks. Cool. Bob Smith. Thoughts on SOXI? No. Don't do it. Do some research. Okay? Seriously. Do some research. Check the numbers and make sure it is what you want to get in. I could give you some crap on that company and you would not be a happy camper. But tell you what, show up again tomorrow night. We'll talk more. You guys have a great night. I'm out of here. Done on Facebook. See you later. Done on Instagram. Bye, all y'all. Done on TikTok. Wowza. And now, done on YouTube.